Good evening, everyone. So, in continuation with our last class, so we have completed almost majority of the topics. So, come back to the basics, that is introduction to GST. There is one query. Good evening, sir. I have a query. GTA service available for funeral services is not exempt but is chargeable to RCM, correct? And if so, is it because funeral service are only exempt but GTA service are not that? Funeral service is not exempted. Funeral service is coming under excluded from supply, and definitely GTA will not transport dead bodies. So GTA transporting dead bodies means that will be some movie, etc. So generally GTA will not transport dead body. What GTA transport is the equipment required for funeral service, etc. So that's the reason why funeral service is excluded from supply. Okay, it's not exempted from supply. But GTA service already we saw what are the exemptions. Apart from that, other cases it will be taxable. And there is one question in that what has happened, a person will be engaged in funeral service and he received the GTA. So GTA definitely it will be taxable because it's not covered under the exemptions, notified goods, or it is not covered under the recipient individual HUF, AJP trust, or if the recipient is government registered only for deducting TDS. If it is not covered there, then it will be taxable. And in that question what happened, so that particular GTA services ITC not available like that it is given. But when my outward supply is excluded, when my outward supply is excluded from the supply, there is no restriction to ITC, ITC should be available. There is one question in the past exam wherein they are telling ITC not available, but suppose if that particular point is tested now, you clearly write down only few activities which are excluded from supply is only treated as exempted supply, like sale of land, sale of building, sale of warehoused goods, but other activities which are excluded from supply will not be treated as exempted supply. Consequently, ITC reversal shall not arise and ITC is available. And one more point also, that is any manufactured goods distributed as gifts or free samples. So as per CBIC circular, it is treated as exempted supply because goods which are manufactured by me will not come under supply 71C because it is not disposal of business asset on which ITC is available. Finished goods I am making, I am not purchasing. So due to that reason, it is not a supply. But even then you have to treat that finished goods which are given as free samples or gifts as exempted supply, and proportionate ITC on our inputs, input service and capital goods needs to be reversed. So that is also one point is there. Then, so coming back to this, how GST is formed, all indirect taxes levied by central government in the past got subsumed into GST, like excise duty, service tax, central sales tax got subsumed into GST, but customs duty is outside the ambit of GST. However, additional customs duties like CVD, SAD got subsumed into GST. CVD is to counterbalance excise duty and SAD is to counterbalance sales tax, and specified indirect taxes levied in the past like value added tax, advertisement tax, luxury tax, entertainment, lottery betting tax and purchase tax, also known as octroi, also got subsumed into GST. Apart from this, the other indirect taxes levied by state government not subsumed. Also entertainment tax and other indirect taxes levied by local authority not got subsumed into GST. And basically this first chapter is not there in syllabus at all. So this they have given as an annexure. So therefore you may not get any question related to this. So it is there. So that's why we are discussing. And India follows what model? Dual GST model. Dual GST model means where both central government and state government will levy tax on the common tax base. And India adopts dual GST model from Brazil and Canada. And dual GST model is wide of Constitution 101st Amendment Act 2016. And then we have GST Council, Article 279A of the Constitution. And it is constituted by President. It is a decision making body. How many members? 33 members. In the 31 will be state finance ministers, one union finance minister, one union MP in charge of the revenue, and quorum is 50%. Central government will be 1/3 weight and state government will be 2/3 weight, and they need a weighted majority of 3/4. And types of GST, CGST for intrastate supply, SGST also intrastate supply, UTGST also on intrastate supply, but UTGST not levied by union territory, it is by central government. IGST is on interstate supply. GST compensations is levied only on notified goods up to 31/3/2026, and whenever the IGST is levied, 50% of that IGST will go to the consuming state based on place of supply. If the place of supply cannot be ascertained, then it will be apportioned between the states based on the turnover of that person. For example, that person is making sales, he is in Tamil Nadu, he is making sales to Karnataka, Andhra Pradesh and Telangana in 3:2:1 ratio. Then whatever IGST component will be taken, 50% will go to central government, remaining 50% will be divided in 3:2:1 ratio. This point is there. So this is given in miscellaneous provisions. There they have given the section 17 of IGST Act. So first, based on the place of supply, if place of supply not ascertainable, because if it is export of goods or services, the place of supply will be outside India, so foreign territory, like that we will mention. In case of deemed interstate supply, the place of supply will be mentioned as other territory. So in that case, the 50% of the IGST will be apportioned between the states based on the turnover of that person. So during the financial year, suppose if he is not filing the returns properly, then no one knows his turnover. Then in that case, it will be distributed to all states and union territories based on their revenue during the previous year. That is, we'll take all states GST revenue and union territories GST revenue, and that 50% of the IGST component which could not be distributed to a specific state will be divided between all the states and union territories. So this you put a tick. So it may be tested in exam. It's there in the study material. Lot of people don't know that it is given in the miscellaneous provisions. Then supply of goods or service or both is a taxable event, and you know that if it is location of supplier and place of supply in the same state, it is intra-state supply. If location of supplier and place of supply is in two different states or two different union territories, a state and a union territory, then it is interstate supply. And what are the union territories? We have 5 union territories: Ladakh, and then Daman, Diu, Dadra, Nagar Haveli, Chandigarh, and Andaman and Nicobar, Lakshadweep. These are union territories without state legislature where UT GST Act is applicable. The other 3 union territories, that is Delhi, Jammu and Kashmir and Puducherry, is also union territory with state legislature where SGST Act will be applicable. And GST network is the information technology infrastructure provider, and basically GST network will facilitate registration, payment of tax, e-invoices, e-way bill, etc. and even settlement of IGST is also done by GST network. And constitutional provisions, this article 265, which talks about power to levy tax is divided between the parliament and the state government. That, and goods outside the ambit of GST, alcoholic liquor for human consumption and undenatured. It's actually undenatured, but undenatured or denatured, that doesn't make any difference. So undenatured extra neutral alcohol, rectified spirit used in manufacture of alcohol. So now 3 alcoholic liquors are excluded from the ambit of GST. Normal alcoholic liquor for human consumption, that is finished product, and the raw material, that is undenatured extra neutral alcohol and rectified spirit. These 2 are raw material, that is also covered under exclusion from GST, which means non-taxable supply. What about the other raw materials which are purchased by the liquor industry? Whether GST is chargeable on that? Yes. Only on these 2 major raw material now they have brought in that it will be outside the ambit of GST. Same way petroleum products, 5 petroleum products, that is crude oil, petrol, commonly known as motor spirit, and then high speed diesel, not light speed diesel oil. Light speed diesel oil will be subject to GST, high speed diesel. Then next we have aviation turbine fuel and natural gas. Whether tobacco is subject to GST? Yes, tobacco is subject to both central excise duty and GST. One more point, opium. Opium is subject to state excise duty as well as GST. So opium is subject to both state excise duty. State excise duty is not subsumed into GST. So state excise duty and GST. So opium is subject to this. Next, opium, Indian hemp and other narcotic drugs. That one. Next, supply chapter. In this supply chapter, section 7. So basically 7, you will not get a standalone question, but you will be required to apply section 7 in the first question, that is question number 1, 14 marks question, because they will give some transactions which may not be constituted to supply. The first thing that you read any transaction or any activity in the question paper, check whether it is supply or not. So because if the activity is not at all a supply, the question of GST shall not arise. So we need to write that it is not a supply and consequently GST is not payable. So therefore supply section 7, 7.1 includes 7.1a, classification of supply into goods or services. Whenever you refer to 7.1a, read with schedule 2 of CGST Act, like that you need to write. 7 subsection 2, exclusions. Whenever you write 7 subsection 2, read with schedule 3, like that you need to write. 7 subsection 3, it is classification of supply into goods or services. And already we have classified, but they have power to reclassify, that is given in 7 subsection 3, but under 7 subsection 3 we don't have anything as of now. And supply includes 7 subsection 1 clause A, any activity for consideration in the course or furtherance of business. That activity should be in the nature of debts RLL, that is sale, barter, disposal, license, like that, but any activity will be covered under supply. Only 2 conditions, it should be for a consideration in the course or furtherance of business. Whereas 7.1a also any activity for consideration, and it should be between a person other than individual and its members. For example, a partner providing services to the partnership firm or a shareholder providing services to the company, like between a person other than individual and between them and the members. So between them, not necessarily that company only to shareholder, shareholder to company also covered, partnership firm to partner and partner to partnership firm, that is also covered under 7.1AA. In this regard, one important point can be tested, whether partner's remuneration is treated as supply under 7.1AA. So definitely partner remuneration is not treated as supply under 7.1AA, because partner remuneration will be withdrawal of profit. However, if there is a separate contract entered by the partner with the partnership firm for providing some services for which the partnership firm is paying some consideration, then definitely it will become supply under 7.1AA. This point will be tested. Be careful with respect to that. And it is not RCM, it is FCM only. Only director services to company is covered under RCM, but partner services to firm is not covered under RCM. It is FCM. The partner only should pay, and if the partner is registered, they will pay, otherwise they will not be paying GST on that. Then 7.1B, import of services for a consideration, whether or not in the course or furtherance of business. 7.1B we need to see from the recipient point of view, and always in the course or furtherance of business or not, we need to see from recipient point of view, because in case of import of services from recipient point of view, all other cases it will be from supplier point of view, and it may or may not be in the course or furtherance of business. The moment it is for consideration, it will become supply under 7.1B. Then 7.1C, read with schedule 1. So read with schedule 1, like that you need to write. So there are 4 activities, that is DRIP. D for disposal of business asset. First it should be a business asset. It can be fixed asset or it can be current asset. It is a business asset on which ITC avail, means you are purchasing that business asset. At the time of purchasing, you have paid some GST, and that GST has been taken as ITC. That business asset has been disposed of and it is without consideration. It will become supply under 7.1C, and in that case, what should be taken as a value? We need to determine whether it is capital goods or other goods. If it is capital goods, 18 subsection 6 will come into the picture. That is so much of the ITC avail minus 5% for every quarter or part thereof from the date of purchase till the date of supply. That, or B, GST on sale value. There is no sale value. So due to that reason, we need to determine the value under Rule 30 or Rule 31. Rule 30 will be cost plus 10%. Usually when the new asset is purchased and disposed of, you will get the cost of acquisition plus 10%. But Rule 30 also fails, then it will be residual value, that is Rule 31. So you need to search for in the question somewhere like market value or fair market value, like that is given. So we can take that as the Rule 31 value. If it is other than capital goods, then 18.6 will not be applicable. So we need to see the section 15 transaction value. So that section 15 transaction value fails. So we need to determine again value as per Rule 30 or Rule 31. So that is in case of disposal of business asset on which ITC avail. Then related party transactions, including transaction between distinct person, we need to determine the value as per Rule 28, and it is common for both goods and services. So the 28 connection will be there. Then even if there is a consideration, we will apply Rule 28. If it is without consideration, no doubt it is related party transaction, so it will become supply 7.1C. If it is for some nominal consideration, even then it will become supply under 7.1A. Then also we will invoke Rule 28. There is one question which is given in the past exam, that is an employer will be providing food to the employee, for which they will be collecting some nominal amount of 10%, which is 5,000 rupees towards the 10% of the cost, like that they will be giving. So now what we need to do is that definitely it will be supply under 7.1A. As employer and employer related, we need to invoke Rule 28. As per Rule 28, we need to take the open market value. As 10% is 5,000 rupees, 100% will be how much? That will be taken as the open market value in that case. So like that. And distinct persons also the same. Then import of services by a person from a related person. So import of service from a related person or any other establishment located outside India. But it should be in the course or furtherance of business, then only it will come under 7.1C. And remember always 7.1C without consideration, C for no C, no consideration, 7.1C. Then principal agent transaction. So any transaction between principal and the agent where the agent is acting on behalf of principal, then it will become 7.1C, and it should be only for goods. So for services, we don't have 7.1C for principal agent transaction, only for goods. So this point also will be tested. There is a principal who is providing some services to the agent, and the agent is acting on behalf of the principal, and consideration is not involved in the transaction. However, the open market value available for this service is so and so, like that they will give. First of all, it is not a supply, because 7.1C principal agent transaction, there is no supply for services, only for goods it will be there. Okay. Then when an agent is acting on behalf of principal, if it is a sale transaction, the invoice is raised by the agent in his name. If it is a purchase transaction, the purchase invoice is in the name of the agent. So then the agent is acting on behalf of principal. Now first what we need to see is that check 7 subsection 2. If an activity is covered under 7 subsection 2, it is not a supply. So you will write that it is not a supply. If it is not covered under 7 subsection 2, then you need to check the inclusion 7 subsection 1. If it is not covered under 7 subsection 1 also, you will write that it is not a supply. That is this. And these are the definitions that we have. Look into summary of 7 subsection 1. 7.1a, any activity for consideration, course or furtherance of business, point of view supplier, coverage goods or services. And 7.1aa, any activity between person other than individual and its members, consideration yes, course or furtherance of business yes, point of view supplier, and the coverage will be goods or services. And only difference between A and AA is A is between any person to any person, AA is between a person other than individual and its members. 7.1b, import of services for a consideration, whether or not in the course or furtherance of business, from recipient point of view, always import of service from recipient point of view, and the coverage is only services. 7.1c, read with schedule 1, DRIP, in this case consideration is not there. For disposal of business asset, it may or may not be in the course or furtherance of business. What we need to see is that is there a disposal of business asset? That much is only what we need to check. And from whose point of view? Recipient point of view. And the coverage will be only supplier and goods will be there. Only in case of I, we need to see from recipient point of view, and other 3 will be in the course or furtherance of business. And principal agent transaction is only to the context of goods. Then supply excludes. Exclusion from the meaning of supply. 7 subsection 2. In that we have pillar less do. These are the list of activities you need to remember. P for post. What post? Government post, constitutional post, and nominated post. That is excluded from supply. And government post refers to MLAs, MPs, etc. Constitutional post refers to Supreme Court Chief Justice, or we have this governors, etc., president. That is constitutional post. Nominated post is a body where the post will be like to be selected by the government, like RBI governor, SEBI chairman, CBI director, examples. Then I for insurance service jointly supplied. Jointly supplied, that is co-insurance. In case of a co-insurance, what will happen? There will be 3-4 insurers. Say 3 insurers are there, A, B, C, and these 3 insurers together will provide the services to the insured, for which there will be one person selected as the lead insurer, and the insured will pay premium to the lead insurer, and the lead insurer will in turn transfer the premium to the co-insurers. Now here the background is that if the lead insurer pay GST on the gross premium, then whatever premium which is received by the co-insurers, they are not required to pay GST on that. That is only excluded from supply. What if the lead insurer is not paying GST on the gross premium? Then the co-insurers, whatever premium share that they receive, it will be subject to GST, that is covered under supply. So important condition is that in case of co-insurance, the lead insurer should pay GST on the gross premium. Next page you can see, in case of co-insurance services, if lead insurer pay GST on the total premium, that is very, very important condition. If lead insurer pay GST on the total premium, such insurance premium shared with the co-insurer is not a supply. That is this. Next, L for legal fees, legal fee collected by the court or tribunal. L for land sale, including sale of building where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. And A for actionable claims other than specified actionable claims. Specified actionable claims are covered under supply, and other actionable claims are excluded from supply. Specified actionable claims are HC block, horse racing, casinos, betting, lottery, online money, gaming and gambling. And R for reinsurance commission. Reinsurance commission, here what happens is that, so there is a reinsurer, that reinsurer will get the business from the main insurer, for which reinsurer will give the commission to the main insurer. Now in that case, whatever premium that is received by the reinsurer, if they pay GST, then the commission earned by the insurer will be excluded from supply. So please try to understand this in the next page. Reinsurance commission retained by the insurer for services provided to reinsurer, that is insurer will provide service to reinsurer by way of bringing in business to the reinsurer, for which reinsurer will pay the commission, and that commission retained by insurer, because what will happen is that insurer has to pay the premium to the reinsurer because they will outsource the work of insurance to another person. Say for example, there is a insured, and that insured is like entering into contract with insurance company A. Insurance company A in turn enters into contract with insurance company B. Now insured will make payment to insurer, that is insurance company A, that is a premium will be paid, and out of this premium a portion of the premium will be shared by A with B. Say for example, some 10 lakhs is paid by the insured to A, and A will share a premium of 6 lakhs with B, and for bringing in the business of 6 lakhs to B, so B will be giving a commission. So that commission will be somewhere like 60,000 will be given to A, which means A is not going to remit 6 lakhs, A is going to remit only 5,40,000. But here what happens is that if B is going to pay GST on 6 lakhs, even though B literally receives 5,40,000, but if B pays GST on 6 lakhs, then the 60,000 which is earned by A is not subject to GST. That is excluded from supply. What if B pays GST on the net amount that is received by him? What is the net amount that is received by him? 5,40,000. Then in that case, on 60,000, insurance company A should pay the GST that is covered under supply. That's what I have given. If insurance company paid 3 lakhs as insurance premium to reinsurer after deducting 40,000 as the commission, so then what is the total premium? 3,40,000. Total 3,40,000. In the 3,40,000 commission is deducted and remitted 3 lakhs. Then reinsurer if pays GST on 3,40,000, then the commission retained by the insurer, that 40,000 retained by insurer is not a supply. What if the reinsurer pay GST only on the net amount that is received by them, that is 3 lakhs, then in that case that 40,000 rupees commission will be covered under supply. Then next one, that is with respect to reinsurance commission. L for liquor license granted by state government, and what if liquor license I got and which in turn I will be doing it to some other person, so that will be excluded from supply or covered under supply. Covered under supply only state government to me is excluded from supply. Employee to employer in the course of employment. Then sovereign functions, that is panchayat or municipality, that two only excluded from supply. Then sale before import, that is on high seas sale. So the sale before import, when the goods are in transit, so I transfer the document of title called as bill of lading or airway bill to some other person. The subsequent buyer is only the importer, so he is going to pay the customs duty and clear the goods. So therefore whatever money that I received from a subsequent buyer will be excluded from supply, that is sale before import. Death related, that is funeral, burial, crematorium, mortuary, including transportation of deceased. Then outside the country movement of goods, goods originates outside India and terminates outside India, so that is also excluded from supply. Warehouse goods under customs sold, I imported the goods, I kept the goods in the warehouse and I did not pay any customs duty. Now I transfer the warehouse receipt to my subsequent buyer. As usual, like high sea sale, the subsequent buyer is only going to clear the goods and pay the customs duty. So whatever money that I received from my subsequent buyer will be excluded from supply. So just like high sea sale only, the only difference is that sale before import, the goods are in transit, but in case of warehouse goods, the goods already reached the country and it is in the warehouse. And also when it comes to customs duty payment also, it will slightly differ. In case of sale before import, high sea sale, so when you are the subsequent buyer, you will take the price at which you purchased as the assessable value for payment of customs duty. For example, I have imported at $10,000, I sold it to you for $11,000. Now how much will be taken as assessable value while computing the customs duty by you? $11,000 if it is high sea sale. Suppose if it is warehoused goods, I imported the goods for $10,000, I kept it in the warehouse and thereafter I transferred the document to you and I have sold it for $11,000. Now how much will be taken as assessable value by you while computing the customs duty? $10,000. The price at which I have imported only will be taken, whereas in case of high sea sale it will be $11,000 is the assessable value, whereas in case of sale of warehoused goods, so then assessable value will be taken as $10,000. Don't forget this. And then suppose if you take $10,000 as the assessable value, then IGST will compute differently. That IGST will be computed based on the price at which you have purchased goods from me, that $11,000, or assessable value plus basic customs duty plus social welfare surcharge, whichever is higher will be taken. On that the customs duty will be computed by you. Okay, so it has got a connection to customs there, so that is the difference. Next we have gifts given by employer to employee not exceeding 50,000 rupees per annum per employee is excluded from supply. What if the value of the gift exceeds 50,000 per annum per employee? Entirely it will be covered under supply. While determining the value, should we include GST or exclude GST? Definitely we need to exclude GST. And specified actionable claim, already we have seen. Everywhere we have to exclude GST while determining the value. Only in one place we need to include the GST, that is e-way bill. In case of e-way bill, while determining the value of the consignment, we need to include GST. But all other places the value means it will be excluding GST. And this sale of land, sale of developed land is also sale of land. So due to that reason it is excluded from supply. But for development charges, for example, I'm a developer, I will do lot of leveling, laying down of roads, drainage lines, etc. and I will sell the developed land to you. So sale of land as well as developed land, both are same treatment. It is excluded from supply. But towards the development, if I collect any charges, the development charges alone will be covered under supply. That is this circular. Second one, perquisite. If there is any perquisite which is given by employer to employee, that should not be treated as gift. So perquisite will be covered under offer document and it will be forming part of salary. So employer is not required to pay any GST on that. What if it is not covered under offer document? Then only it will be gift. And that gift we need to check that 50,000 point. But for perquisite, whatever may be the amount, that will be excluded from supply because perquisite forms part of salary. Then important definition or points in this goods. So goods means any kind of mobile property. Goods includes actionable claim, growing crops, things attached to or forming part of land agreed to be severed before supply or under a contract of supply. And goods excludes money and securities. Money and securities neither goods. Even service also excludes money and securities. Service is anything other than goods. And transaction in money for a separate consideration. That separate consideration will be treated as supply of service. For example, I am giving you 10,000 rupees and I am recovering 10,500. That 500 rupees will be separate consideration. That 500 rupees only will be treated as supply of service. Then transaction in securities is not treated as goods or services, but facilitating or arranging transaction in securities like stockbroker service or depository service, that will be treated as supply of service. And money means Indian currency, foreign currency or any instrument recognized by RBI, but does not include old currency, so which is not in circulation. Therefore sale of old coins or sale of cryptocurrency, because cryptocurrency is not recognized by RBI. And old coins also not covered under money definition. So sale of old coins and cryptocurrency treat as sale of goods, and definitely it will attract GST. And as it includes instrument recognized by RBI, vouchers are there, prepaid vouchers. Prepaid vouchers means we will pay money and we will buy the voucher and we will give it as gift to some other person to redeem it. So this is called as prepaid vouchers. So a lot of Amazon gift vouchers, Flipkart gift vouchers, Myntra gift vouchers, even Shopper Stop, Lifestyle, there are a number of shops which will be giving the prepaid vouchers. You can pay money and you can buy that voucher. That will be transaction in money, purely transaction in money, because prepaid vouchers are instrument recognized by RBI. So therefore it is not treated as supply because it's a pure transaction in money. Then what about vouchers which are not prepaid? Gift vouchers we have got. For example, you go to Reliance Trends and you are getting one gift voucher, 500 rupees gift voucher. So what is the treatment of that? Is it a prepaid voucher? Definitely not a prepaid voucher. So it will be coming under gift vouchers, and that gift voucher will be covered under actionable claims. Why? Because if you redeem that gift voucher, you will be getting the benefit, and the person who is holding the gift voucher will receive the benefit. It is transferable, legally enforceable, and the holder of that particular voucher is entitled to receive the benefit. So no doubt gift voucher is a actionable claim, and only specified actionable claims are covered under supply. Other actionable claims are excluded from supply. So due to that reason, any voucher which is issued which will not be treated as supply, because vouchers will be either prepaid voucher or other than prepaid voucher. Prepaid voucher will come under money definition, other than prepaid voucher will be coming under actionable claims. Both are excluded from supply. Money is also not supply, and actionable claim other than specified actionable claim also excluded from supply. So in short, what you need to write, if there is any voucher, then it is neither goods nor services. Consequently, it is not a supply. But what will be the supply? There will be some goods or services which are supplied against a voucher. So therefore that supply of goods or services against a voucher is only the supply, and therefore this voucher should be treated on par with consideration. So therefore what will happen, when you are redeem that 500 rupees, you are buying a garment for 1500 rupees, 500 rupees you are redeeming, you pay net amount only 1000 rupees, but the GST will be payable by the shopkeeper on 1500 rupees, because a voucher here will become consideration. Then, so actionable claim means what? Any instrument which satisfies 4 conditions: right to receive a benefit or recover a debt, which is transferable, legally enforceable, and the holder of that right is entitled to receive benefit or recover a debt. Example, bill of exchange, lottery ticket, promissory note, bearer check, etc. and all. So those actionable claims which are covered under definition of money, like bill of exchange, promissory note, bearer check, which is treated as money, so which is excluded from meaning of goods and services, so neither goods nor services. But those actionable claims which are not covered under money definition will be treated as goods. In that, HC block is covered under supply, others are not a supply. That's what I gave an example here, vouchers, whatever I have discussed now. Then important points related to HC block: the rate of GST on this specified actionable claim is 28%, and these are treated as goods. and online gaming versus online money gaming, there is a difference. Online gaming is treated as OIDR service, but online money gaming is covered under specified actionable claim. Online gaming is playing a game over the internet for which you spend money, that is online gaming, whereas online money gaming is that you invest money with the expectation of earning it back. So either where the money or money's worth or virtual digital asset is deposited by the player in the expectation of winning it back, and whether that game or scheme or competition is using your skill or it's a game of chance or both, game of skill or game of chance or both, and whether it is permissible or otherwise under any law for the time being in force. So right now betting apps are banned, even then people are playing, and whenever that is illegal, and whenever government comes to know, can they recover GST? Yes, that's what they have given, whether the same is permissible or otherwise under any law for the time being in force. Next, even though HC block is treated as goods, import of the same is covered under, not covered under Customs Act but covered under IGST. This point yesterday I told you. Meaning of consideration. Consideration includes monetary consideration or non-monetary consideration. Monetary, that is payment received or receivable, and non-monetary can be in the form of goods or services. But consideration excludes subsidy from central government or state government and refundable security deposit. Consideration can be from any person, so it can be from recipient or any other person. Consideration should be in respect of, in response to, or for the inducement of supply of goods or services. And activity without consideration or consideration without activity is not a supply under 7.1a, but activity without consideration may become supply under 7.1c. Whether donations are treated as consideration depends. If the donations are unconditional donation, where I don't have any obligation to do anything in return against the donation, it is not treated as consideration. Consequently, GST is not payable on that, it is not a supply. However, if it is a conditional donation, against the donation I have an obligation to do something in return to the person who is giving donation, so therefore it is treated as consideration, and the activity will become supply under 7.1a and chargeable to GST. If anywhere donor name is displayed, is it conditional donation or unconditional donation? Whether he obligated it or not obligated it, not obligated. If he obligated, no doubt it is conditional donation. He did not obligate, out of gratitude we have displayed the name. Whether display of name gives business advantage to the donor, yes, then it will be treated as conditional, deemed as conditional donation, and it should be treated as sponsorship services. And in case of sponsorship services, supplier should be, that is supplier is the one who is receiving the donation, is a person, should be other than body corporate, and the recipient should be body corporate or firm, then it will be RCM, otherwise it will be FCM. So connect this display of donor name, conditional, deemed as conditional donation, and it should be treated as sponsorship services. What if display of name is not giving any business advantage to the donor? Treat it as unconditional donation, not a consideration, and consequently no GST on that because it is not a supply. Then meaning of person, person under Income Tax Act plus central government or state government is the person under GST. Person under Income Tax Act, individual, HUF, company, firm, AOP, cooperative society, local authority, artificial juridical person and other body corporates. So whereas person under GST extra what we have is central government and state government extra will be there, and they are also required to pay GST. Taxable person is the person who is a registered person or liable to be registered. Meaning of business, almost every activity will come under business unless it is personal activities. So therefore trade, commerce, manufacture, profession, vocation, adventure, wager or any other similar activity, and its incidental or ancillary is also covered, and whether or not it is for a pecuniary benefit, irrespective of the volume, frequency, continuity or regularity of the transaction. This is the general meaning of business. There are some specified activities, that is entry tickets is always treated as business, and holding an office accepted in the course or furtherance of trade, profession, occasion. There is an association, for example, chartered accountant is member of that association and he became the president of that association. For holding that office he receives some honorarium or remuneration, that will be business only. And supply of goods or service in connection with commencement or closure of business, at the time of commencement of business or at the time of closure of business, when we supply any goods or services, even though that is not our main business activity, that is also part and parcel of business. For example, if I am starting a restaurant and as a part of that restaurant I purchase the AC, when I am shutting down the restaurant, I am selling the AC. Sale of AC is not my business, restaurant is my business, but sale of AC is also treated as business because it is in connection with closure of business. Then next, provision of facilities or benefits to members by a club, society or association. So resident welfare association, collecting the maintenance charges from the members will be coming under business activity. Any activity of a race club including betting transactions, and all activities of government will be treated as business. That's the reason why government is a business entity. Then meaning of related already we discussed. What is it you need to remember? Family scope. That family scope is what you need to remember. Then whether owning a controlling interest in the form of shares by holding company in subsidiary company is supply of service. That is, whenever a holding company is going to get the shares allotted from the subsidiary company, even though both are related, first of all, shares are neither goods nor services, so consequently this activity will not be subject to GST, and this goods not liable to GST already we have seen. Meaning of various turnovers. Taxable supply is a balancing figure. Exempted supply means notified as exempted, nil rated, non-taxable. Non-taxable supplies means which are not leviable to GST. Zero rated supply means export of goods or services or supply of goods or services to SEZ with respect to the authorized operations. And supply of goods or services, if it is chargeable to GST, that is GST payable, it will be taxable supply. If it is not chargeable to GST, GST not payable. Why it is not payable? Maybe it is not leviable, non-taxable supply, or leviable but nil rated or notified for non-payment. All these three will come under exempted. Therefore, taxable supplies do not include exempted supplies under GST. All these four should be taken into aggregate turnover. Generally, for computing the meaning of aggregate turnover, we should take everything, that is taxable supply, exempted supply, non-taxable supply, zero rated supply. All the four should be taken. Even interstate supplies will come in aggregate turnover. Aggregate turnover is always computed on an all India basis, and two things will not be included in aggregate turnover, that is inward supply, as turnover is outward supply. Inward supply under RCM will not be included in aggregate turnover. Even GST group, CGST, SGST, IGST compensations will not be included in aggregate turnover. Whenever my outward supply is covered under RCM, it will be included in my aggregate turnover. It will not be included in the aggregate turnover of the recipient. Then GST on sale of flats and buildings. If entire money is received before obtaining completion certificate, it is covered under supply and it is treated as works contract service and GST payable. If entire money is received after obtaining completion certificate, GST is not payable because it is excluded from supply, because it is treated as sale of immovable property. If part money received before and remaining money received after, then also it will be covered under supply, because only when entire consideration is received after obtaining completion certificate, it is excluded from supply. If part before, part after, covered under supply. What part is covered under supply? Entire amount is covered under supply. So GST payable on entire amount. Wherever GST is payable on flats, buildings, etc., definitely it will be treated as work contract service only, because sale of immovable property is excluded from the meaning of goods. And next, distinct person. There are 2 points in distinct person. One, registration of the person to the other registration, or registered establishment of a person in a state and unregistered establishment of the person in another state. So same person's unregistered establishment another state is also distinct person. When you have multiple business in different state, separate registration with respect to each state is mandatory. So one registration to other registration is distinct. When you have business in the same state but in different place of business, separate registration with respect to each place is optional. If you go for separate registration, then it is distinct person. Otherwise, there is no distinct person. Head office, branch office in the same state, because already they tested it in one 14 marks question. Head office will be sending the goods. Head office is in Nagpur and branch office is in Nasik. And nowhere in the question they have given that for Nasik branch they have obtained separate registration. So which means it is first of all not a supply, but students will take it as distinct person and apply rule 28 and all, and they will arrive at the answer. Because first of all, when you have two branches in the same state, you should check for whether they have obtained separate registration or not in the question. Only if they have obtained separate registration, then they are treated as distinct person. Otherwise, they are not treated as distinct person, because it is optional for them to go for separate registration or not due to that reason. And suppose if multiple businesses in the same state and same place of business, can they obtain separate registration? No, they cannot obtain separate registration. Another establishment in another state, whether registered or not, treated as distinct person. In this regard, one point you need to remember is that SEZ unit, even though in the same state, okay, SEZ unit of a person, SEZ unit of a person in DTA, SEZ unit of a person in DTA, person in DTA has a SEZ unit, okay, SEZ unit of a person in DTA should obtain separate registration, even though located in same state, So SEZ unit of a person in DTA should obtain separate registration. So that's the reason why SEZ unit will definitely have a separate registration, even though it is optional for you within the state to go for separate registration, but when that unit is a SEZ unit, definitely you need to go for a separate registration. Keep this point in mind. Then meaning of recipient. Who will be treated as recipient? If consideration is involved, the one who is liable to pay consideration. Consideration is not involved, and if it is goods, the one who is receiving the goods. Consideration not payable if it is services, the one who is receiving the services. Then classification of supply into goods or services. Once an activity becomes supply, it should be divided into goods or services. If it is movable property, check whether there is a transfer of title. It may be at present or it may be at future date. Then it will be treated as supply of goods. If there is a transfer of right to use, that is renting or leasing, it is supply of services. And whenever there is a immobile property, supply of goods, so transfer of title will never come under supply of goods, and because it is excluded from supply, whereas construction of immobile property or transfer of right to use immobile property will come under supply of services. Construction of immobile property, example lifts and escalators. Transfer of right to use immobile property, renting of land, renting of building, etc. Intellectual property right. If permanent transfer of IPR is there, it is supply of goods. Temporary transfer of IPR is there, supply of services. Example, patent of a company sold, patent of a technology sold to a company, it is supply of goods. Whereas music director composing music, so that is temporary transfer, supply of services. Carrying out process on the goods belonging to other person. If the substantial material is given by the recipient on which the supplier is only doing the process, it is treated as supply of service. Example, job work, wherein you give me the material, I do the process and I return, it is supply of service. Where I only require to buy the material, I do the process and I give it to you, then it will be treated as supply of goods. Substantial material required for the process supplied by the recipient, then it is supply of service. If substantial material required for the process supplied by the supplier only, then it is supply of goods. Supply of goods along with services. 3 notified activities, even though it involves both goods and services, it will always be treated as supply of service. Works contract, information technology software, and supply of food. And other supplies, we need to check whether it is composite supply or mixed supply. If it is composite supply, check the principal supply. If the principal supply is goods, entirely it is treated as goods. Example, AC and installation is composite supply, and the principal supply is AC, which is goods, so entirely it is treated as goods. And if the principal supply is services, entirely it is treated as services. For example, coaching and study materials, coaching is services and study material is goods. And if it is composite supply, the principal supply there is coaching, which is service, entirely it will be treated as supply of service. Whereas in case of mixed supply, see the highest rate. If the highest rate is goods, entirely it will be goods. For example, TV 28%, optional warranty will be 18%, and these two are not naturally bundled, so it is a mixed supply. Highest rate is TV, which is goods, so entirely it will be treated as goods. Whereas the next case, that will be say video lectures and pen drive, the highest rate is service, so entirely it will be treated as service. Apart from this, any other activity, doing an act, not doing an act, or tolerating an act. Doing an act, so I am doing something. Not doing an act, I am not doing a particular activity like non-complete fees. Tolerating an act, we have seen some examples for tolerating act like breach of contract, etc. So then it will be supply of service. Works contract is usually in relation to immobile property, keep that in mind. So movable property, we will never call it as works contract. It should be in relation to immobile property. There are 2 elements in works contract: transfer of property in goods as well as provision of services. Against lump sum consideration, it should be in relation to immobile property. Example, I am doing the construction, I am also supplying the material required for construction, and I collect some money, that is works contract. Meaning of job work, already we saw, carrying out process on the goods belonging to other person. And next we have composite supply, mixed supply, section 8. The difference between composite supply and mixed supply is that composite supply, all are taxable, naturally bundled in the ordinary course of business, and the principal supply is involved, then it is a composite supply. Whereas if it is not a composite supply, then it will come under mixed supply. But for mixed supply, there is only one condition, that it should be for a single price. So first we need to see whether there are 2 or more supplies in a single transaction. If it is no, section 8 is not applicable. Yes, then check all are taxable, naturally bundled in the ordinary course of business, principal supply identifiable, then it will be composite supply. The price may be single or the price may be separate, and we need to take the rate of principal supply and apply it on entire transaction. If any one is no, then check is it single price. Yes, then it will be mixed supply. We need to take highest rate for the entire transaction. No, that is single price. No, then it will be individual supply. We need to take respective rate for the respective supply. Then look into this note 1. In case of servicing of cars, the test of composite supply should not be applied, because even though in case of servicing of cars, they do the replacement of part and they will provide the labor charges for replacement of part. So replacement of part is goods and labor charges will be services. even though it is composite supply, but for cars alone, we should not treat as composite supply, we should treat as individual supplies. If the price is shown separately, like that one circular is there, parts replaced and labor charges for replacement are treated as individual supplies if the amount is shown separately for each. Mostly in exam, if at all composite supply, mixed supply is tested, the only area where you get confused is naturally bundled or not naturally bundled. So there alone you have to use little bit of your intelligence, that is whether one can be supplied even without the other, then it is not naturally bundled, so it cannot be supplied in the ordinary course of business. Means we need to see the usual business pattern, and based on that you need to write. Suppose if you are clueless, you please take assumption and you write, but always see it from the more probable side, don't see it from the less probable side, see it from the more probable side. Example, laptop and laptop bag. If you see more probable side laptop, they will be giving laptop bag, but you might have some experience that will not be called as the more probable. That is a mistake that you will be doing. So you will go to one shop, because you are rich kids, you will buy Apple laptop or you will buy gaming laptop. So no one will give laptop bag and all free for you, because when you can afford that, you can afford the bag also. That does not mean that it is a general rule. So therefore don't use your experience what you have had. So generally you try to understand the overall business and you interpret based on that. Otherwise remaining information will be given in the question itself. Next one, food and beverages. Food and beverages purchased in a theatre, taxable as individual supplies. So there are three possibilities. Number one, you are booking a cinema theatre, the rate of GST 28%, and you go to the theatre and you buy the food and beverages, the rate of GST 5%. Treat this as individual supplies. Accordingly, the respective rate will be taken. Again, number two, you are booking the ticket, and at the time of booking ticket itself, you are placing the order for food and beverages. Now also the rate will be 28% and 5%. Treat as individual supplies. Okay. Whereas in case, suppose if you are booking a preview theatre or some PVR select director cut like that, some premium theatres, in that case as a part of the entry ticket itself they will give food and beverages as complimentary, because there the ticket price will be 1500, 2500, 5000, 10,000 like that. In that case they will be giving complimentary food to you. Now it will be treated as composite supply, and we need to take the principal supply, that is admission to theatre 28%. So even food and beverages also will be taxable at 28%. That is this. Food and beverages purchased in theatre taxable as individual supplies, taxable at the rate applicable to restaurant, and if the same is purchased along with the ticket, then it may attract composite supply. In such case, food and beverages taxable at the rate applicable to entry to cinema hall. Then looking at the next one, this is summary of CBIC circulars. So first there are 3 points in this circular which you need to remember. If at all there is a movement of conveyance between the distinct person, that conveyance is there moving from distinct person to distinct person, carrying goods or people or for repairs, it is not a supply. So first point, movement of conveyance between the distinct person for repairs or for transporting people or goods is not a supply. Number two, so the repair activity which is done by one distinct person to another distinct person, that alone will be treated as supply. Number three, if there is any movement of spare parts or tools etc. between the distinct person, that is not for further supply by the distinct person but for consumption within the distinct person, then it will not be treated as supply. These are the 3 points you need to remember. And here, even though this circular is used in the context of interstate supply, the same is equally applicable for intrastate supply, that is this. When agent is acting, already we saw. Next step, supply of books, pamphlets etc. Print activity. In print activity, check what is the predominant element. If paper is the predominant element and ink is the predominant element, that is paper and ink is the predominant element, then it is supply of goods. Example, tissue papers etc. Wherein in tissue papers they will buy the tissue paper, they print the logo and they will be giving. Their paper is a predominant element, printing is ancillary, so it is supply of goods. Whereas in case of books, brochures, flyers etc., where printing is a predominant element, so therefore paper is not the predominant, that is ancillary, then it will be treated as supply of service. Next, activity of bus body building. Again we need to see what constitutes the principal supply. Suppose if the material constitutes principal supply, it is supply of goods. If the service constitutes principal supply, then it is supply of service. Example, in case of bus body building, they will buy the metal sheets and metal pipes etc., do the fabrication and installation. So metal sheets and pipes is goods element, fabrication and installation is a service element. Definitely service element is the predominant element, so it is treated as supply of services. Then rethreading of tires. In rethreading of tires, they will be taking the old tire from you and they will do the rethreading. In the rethreading they will do rubber, that is goods element, and rethreading is service element, definitely the predominant element will be service element only. It is treated as supply of services. Suppose if they buy the tire from you already and that tire they do the rethreading and they sell the rethreaded tires, then it will be supply of goods on your tire, that is tire belong to the recipient. So if they do only rethreading, it is supply of services. Then priority sector lending certificates, one bank will be selling it to the another bank in order to meet the priority sector obligation. So for example, bank X will be selling priority sector lending certificate to bank Y, for which bank Y will make some payment. So this particular transaction of priority sector lending certificate should not be treated as transaction in securities. So this will be subject to GST. It is treated as goods. Moreover, it will be treated as deemed interstate supply, and also it will be covered under RCM. So we have list of notified goods, in that it is covered under RCM. Whether the artwork sent by the artist to gallery is subject to GST. On the date when the artwork is sent to the gallery, it is not subject to GST. It is not a supply. Only when the art gallery is subsequently selling it to the buyer, so then only it will be treated as supply in the hands of the artist. Next, tenancy right or pagadi system. So first we need to see, whenever there is a transfer of tenancy right arises in a situation when there is a lock-in contract, lock-in tenancy agreement, and tenancy right, transfer of tenancy right or renouncement of tenancy right against the tenancy premium will always be taxable in the hands of the tenant. For example, I am tenant of a property, I transfer the tenancy right to another tenant, for which I will get some money, or I will renounce the tenancy right to the property owner, for which the property owner will pay me some money. So this money what I receive is known as tenancy premium. It will always be taxable in my hands, whereas I will share. For example, I transfer the tenancy right to another tenant, he gives me the tenancy premium. Out of that, a share I will give to the property owner. The tenancy premium share received by the property owner will be taxable if the rent of that property is taxable. If the rent of that property is exempted, the share of tenancy premium received by the property owner is also exempted. Then director remuneration already we saw, 192, 194J. Then whether insured getting no claim bonus should not be treated as consideration. See, always you remember this point, discount received is discount earned, that is discount received is amount earned. For example, you are required to pay 8,000 rupees as the premium, renewal premium, but you got a no claim bonus of 1,000, which means instead of 8,000 you are going to pay 7,000, means the 1,000 rupees which you have not paid is 1,000 rupees what you have earned. So which means, is it treated as consideration? No, because for the sake of this 1,000 rupees, I did not lodge the claim, with the insurance company. I did not resist myself in lodging the claim. So therefore, no accident. So I did not lodge the claim. So this 1,000 rupees, whatever I have received as no claim bonus, should not be treated as consideration. From the hands of the insurance company, this no claim bonus will be allowed as a pre-supply discount, and it is allowed as deduction. Interest received by del creditor agent, concentrate. Usually del creditor agent will give the credit facility. First he will make payment to the principal, and thereafter he will receive the money from the customer along with interest. That interest should be treated as interest on loans, advances, deposits if the agent is not acting on behalf of principal. For example, I am the agent, there is a principal, that principal raised invoice to you, which means I am not your supplier, the principal is the supplier. When I collect the interest, I am just giving you the finance facility, this interest will be exempted. Suppose if I raise the invoice to you, I am your supplier, whenever you pay interest to me, that interest will be on account of delay in receipt of consideration, and it will be included in the value of supply and taxable accordingly. Then, whether insurance company is liable to pay GST on the salvage value or wreck value while assessing the damage to a motor vehicle. So if the salvage belongs to the insured, for example, if there is an accident, completely there is a damage of the motor vehicle, and the assessable value of the damage is somewhere like 7 lakhs. So 10 lakhs minus 7 lakhs, 3 lakhs will be the salvage value. So what I am doing, so I am the insurance company, you are the insured. So I am giving you 10 lakhs, means that 3 lakhs worth of salvage is mine. So whenever I am selling that salvage, will it become supply in my hands? Yes, because it will come under incidental or ancillary to my business. So and it is activity for consideration. So it will become supply in the hands of the insurance company. Whereas if I am deducting 3 lakhs and I give you only 7 lakhs, which means that salvage is yours, the damaged parts etc. and all is yours. What you will do, you will sell it, and it may or may not be in the course or furtherance of your business, because if it is your business asset, then it will be in the, that is that motor vehicle is your business asset, then it will be in the course or furtherance of business 71A. Suppose if it is your personal motor car, then it will not be supply. Got it? But insurance company will never pay GST on the salvage which is sold by the insured, when the salvage is not the property of the insurance company. So salvage remains with insured. So GST not payable, because it is not a supply in the hands of the insurance company, whereas salvage becomes the property of the insurance company. Sale of such salvage treated as supply and chargeable to GST. This is discussed from the insurance company point of view. What about the insured point of view? That's what. So initially he got 10 lakhs. So when he got 10 lakhs, that is compensatory in nature, that will not be treated as consideration. Suppose if he receives 7 lakhs, that is also compensatory in nature, not treated as consideration. That 3 lakhs worth of salvage, when the insured is selling, depending upon the type of the salvage, if it is business asset related salvage, it will be treated as supply under 71A. If it is not business asset related salvage, it is not a supply. Okay, so mark this as important. Definitely it can be tested. Next, GST on liquidated damages, already we have discussed this. So with this, supply chapter is over. Look into charge under IGST, levy and collection under IGST, concentrate, page number 35. So in this, the first aspect that you need to know is the meaning of India. So India is extending up to 200 nautical miles from the baseline. For the purpose of customs, India is only up to 12 nautical miles from the baseline. Suppose if the supplier is in the land and place of supply is also in the land, it may become either intrastate or interstate supply as per section 7 or section 8. Section 7 deals with interstate supply, section 8 deals with intrastate supply. This is of IGST Act, not CGST Act. If the supplier is in the land and the place of supply is in the territorial waters, as per section 9, again it may be intra or interstate supply depending upon the nearest coastal state. And next, if the supplier is in the land and the place of supply is beyond territorial waters, 12 nautical miles and up to 200 nautical miles, that will be supply in India, not elsewhere specified. So it will become deemed interstate supply as per 75C. If supplier is in the land and the place of supply is outside the territory, like 200 nautical miles, that is outside India, then supplier in India, place of supply outside India, that is deemed interstate as per 75A. And meaning of intrastate supply is given under section 8. So location of supplier, place of supply in the same state or same union territory. However, few transactions, even if supplier and place of supply in the same state, it will not become intrastate. That is, supply of goods or services to or by SEZ, even though within the same state, it will not become intrastate. Then import of goods also will not become intrastate. Supply of goods to a tourist will not become intrastate, because these three will be treated as deemed interstate. And next, interstate supplies, section 7 of IGST Act. Location of supplier, place of supply in two different states, two different union territories, a state and a union territory, that is deemed that is interstate, normal interstate. Then import of goods, import of services, deemed interstate. Even supplier in India, place of supply outside India, supplier in India, place of supply outside India, deemed interstate. Therefore, export of goods and export of services. In case of export of goods, supplier in India, place of supply outside India, so it's a deemed interstate. Export of service also, supplier in India, place of supply outside India, it's a deemed interstate. So first one, import of goods, import of services. Number 2, supplier in India, place of supply outside India. Number 3, export of goods, export of services. Number 4, supply to SEZ or supply by SEZ. And number 5, that is supply beyond territorial waters and up to 200 nautical miles from the baseline. And once the place of supply is determined under section 13, and that is in India, this is the place where generally you make a mistake, be careful. Once the place of supply is determined under section 13 of IGST Act and it is in India, always it is deemed interstate. So when the place of supply is determined under section 13, if supplier or recipient in India and the other outside India, then place of supply as per 13. For example, there is an architect in Tamil Nadu who is providing the construction service to Mr. Elon Musk of US in relation to property in Tamil Nadu. Here the location of supplier will be Tamil Nadu, place of supply will be like location of recipient is US, therefore section 13 will be applicable. And as per section 13, in case of property related services, location of property will be taken. The property is in Tamil Nadu, therefore supplier in Tamil Nadu, recipient is US and place of supply will be Tamil Nadu. Even though supplier and place of supply in Tamil Nadu, but it will not become intrastate supply, it will become deemed interstate supply, because once the place of supply is determined under section 13, it will always be deemed interstate supply. Don't forget that in mind. Next, export of goods versus export of services. Export of goods means taking goods from India to a place outside India. Consideration in convertible foreign exchange is not a condition for export of goods. However, if you are not realizing the proceeds within the time limit under FEMA, then whatever refund that you have got at the time of export, that needs to be paid back along with interest within 30 days after expiry of the time limit under FEMA. Time limit under FEMA is useful for IBS, that is 9 months from the date of export the proceeds should be realized, and then that is given here. Suppose if it is export of services, in the definition itself it is inbuilt that consideration in convertible foreign exchange should be received. So in case of export of service, supplier in India, recipient outside India, place of supply is outside India, but the consideration is in convertible foreign exchange. Wherever it is permitted by RBI, it can be in Indian rupees. Supplier and recipient are not two establishments of the same person. What if supplier is a head office in India and recipient is branch office outside India? It will not become export of service. What if branch office is incorporated as per the law of that country? Then it will be treated as a separate person. So it will qualify for export of services, that is this comment. And there are two cases where it is permitted by RBI that it can be in Indian rupees. What is that? Number one, services to Nepal and Bhutan. Number two, payment is created in this special rupee escrow account maintained by a bank outside India. Means our recipient has created the money in this special rupee escrow account which is maintained by government of India with the bank outside India. So it is as good as we have received the consideration in convertible foreign exchange, and we will be getting BRC and FIRC, bank realization certificate and foreign inward remittance certificate. So definitely it will be qualifying for export of services. Then there are few transactions which are deemed as interstate supply, total 10 points. You need to remember this. Supply to SEZ by SEZ, import of goods, export of goods, import of goods or services, export of goods or services, then location of supplier in India, place of supply outside India, supply of goods to a tourist, supply of goods or service beyond territorial waters and up to exclusive economic zone, supplier in India, place of supply in India determined under section 13, then security lending is given under 9 subsection 3, trading in priority sector lending certificate, and apart from that last advances we have received, but we don't know whether it is intrastate or interstate, then it will be deemed interstate. So advance only we have, but we don't have any other information. Be careful in exam. So whenever in exam they give the advance related point, for goods definitely advance GST not payable. Only for composition scheme or specified actionable claim GST payable on advances, because the time of supply will be due date of invoice or actual date of invoice, whichever is earlier for others. Whereas for actionable claims and composition scheme, due date of invoice, actual date of invoice or date of payment, whichever is earlier. So only in case of these two people, advances on goods GST payable. For others, advance on goods GST is not payable. So this problem will not arise. But for services, it so happens that the advances differently GST will be payable. But what rate should be taken in that case when you are unable to determine the place of supply based on the given question? Because every time in question number 1, you need to determine the place of supply. So that on the background of your mind, you need to keep in, always keep checking it. So because you have to divide that table into CGST, SGST, IGST. For that, place of supply needs to be determined. They have given advance, but you don't have any other information. Don't put it under CGST, SGST, put it under IGST. But if the question says, assume all transactions as intrastate supplies, then you put it under CGST, SGST. You got it? Then supplies in territorial waters. When the supply takes place in territorial waters, see the nearest coastal state or union territory. That nearest coastal state or union territory will be taken as the place of supply or the location of supplier. For example, there is a marine engineer in Tamil Nadu who is providing services in relation to repair to a ship. That ship belongs to a foreign person and that is not used for business purpose but for personal purpose. Then in the case of section 13, because section 13 will be applicable, marine engineer in India and the foreign person. So therefore section 13 performance based service in relation to goods. So definitely location of performance will be taken. Where is the location of performance? In the Bay of Bengal. The ship is in the Bay of Bengal. Now you need to see the nearest coastal state. The nearest coastal state to that ship is Tamil Nadu, then it is intrastate supply. The nearest coastal state to the ship is Andhra Pradesh, then it will become interstate supply because a marine engineer is from Tamil Nadu. Now when the place of supply is determined under section 13, then it should be deemed interstate supply. Now why are we determining intrastate or interstate? Because section 9 of IGST Act says notwithstanding anything contained in this act, which means that section 9 will override. Section 9 will override any section of IGST Act. So due to that reason, even if place of supply is determined under section 13, supply in territorial waters may be intra or inter because section 9 overrides any other provisions of the IGST Act. Then zero rated supplies, section 16 of IGST Act, 2 transactions, export of goods or services, supply of goods or services to SEZ unit or developer with respect to authorized operations, and whether they need to take ITC on the inward supplies. Yes, because even though it is zero rated, but it will be treated as taxable, they can take ITC. Unless it is blocked credit, definitely they can take ITC. And option 1, pay IGST by utilizing the ITC, get refund of that gross IGST. Option 2, they did not pay GST. They should export it under bond or LUT and they will get the refund of ITC. Don't pay any GST on outward supply and supply it under bond or LUT and get refund of ITC with respect to GST paid on inward supply, that is inputs and input service only, but not capital goods. And we have government on the recommendations of council can notify class of goods or persons who are allowed to make zero rated supply upon payment of IGST. Accordingly, there are some notified goods. These notified goods you don't have to remember, but remember that there are some notified goods, but the list of notified goods you don't have to remember. The example is that pan masala, tobacco, essential oils other than those of citrus fruit, like that. But this notified goods list you don't have to remember. Just know that there are some notified goods for which refund under both the options is not possible, neither option 1 nor option 2. Second important point, whenever you are exporting goods, upon payment of customs duty, they will tell export duty. They will not tell customs duty. They will tell export duty. Both are same. Export duty or customs duty, when you pay on export, you will not get refund under both the options. Previously, we used to get refund under option 1, but now both the options not possible. Neither option 1 nor option 2. Then export of exempted goods or services, option 1 not possible because option 1 we have to pay GST, we cannot pay GST, so naturally it will be option 2. All other cases, either option 1 or option 2 with respect to each consignment. And suppose if the question is silent, they gave it as export of goods or services, which option we need to select? Option 2. Because only when it is given as upon payment of IGST, you take it as upon payment of IGST. Otherwise, mostly you take it as without payment of IGST. But in exams, they have taken both. They have taken both, but you follow this because majority of the question they have followed like this only. That is, export of goods or service is given in the question. When the question is silent, you take it as without payment of GST. So there is one question like input tax credit chapter, Rajesh Surana, like that one question is there. In that question, consultancy services provided in UK, consideration is foreign exchange, like that given. No other information, bond, LUT, like that they have not given. But in that question, they have taken the assumption that it is export of service without payment of GST. That's why I told you this. Next, look into the next one. Location of supplier in India, place of supply outside India. And if all other conditions are satisfied, what are the other conditions? Recipient outside India, consideration in convertible foreign exchange, wherever permitted by RBI in Indian rupees, supplier and recipient are not to establishments of the same person, then it will become interstate. Why interstate? Supplier in India, place of supply outside India is interstate first. First it will become interstate, means IGST. Second, as the other conditions are satisfied, it will become export of services. And export of service is zero rated. So you have two options for payment of GST. Don't jump to this. First check interstate, then export of services, then zero rated. What if neither option 1 nor option 2 means should we pay GST or we don't have to pay GST? So this is the confusion we will get. Neither option 1 nor option 2, that's okay. That is, you are making export upon payment of customs duty. So you will not get refund under both the options. Whether we need to pay IGST or no need to pay IGST. You have to pay IGST because first of all export is an interstate. So you have to pay IGST. Sir, if I pay IGST, I will get refund. No, sir, no. Refund not possible does not mean you don't have to pay GST. GST liability is always there. Please be careful. Refund not available, but while computing the GST liability, you need to take the GST liability. So even though refund is not available there, that's what I have given. If it is an interstate, definitely you need to pay IGST and it will become export. If it becomes zero rated, then you have two options for payment of GST. Suppose if any one condition is not satisfied, still it is interstate because supplier in India, place of supply outside India, and IGST payable unless it is exempted from payment of GST. Then supply of goods or services between SEZ and DTA. Supply to SEZ unit or developer. First, it is for authorized operations or not, you check. Yes. Then it is no doubt interstate. First interstate, and it will also become zero rated and two options are available. What if it is not for authorized operations? It is interstate and pay the IGST. And suppose if it is supply by SEZ, supply by SEZ is not zero rated, it is deemed interstate and you need to pay IGST unless it is exempted. So this is the sequence in which you need to interpret. For that reason only I have given this chart. Then exemptions we have completed. Look into time of supply, page number 66. Page number 66, due date of invoice. So first we need to understand section 31. What will be taken as a due date of invoice? In case of goods, we have three provisions: subsection 1, subsection 4, subsection 7. Subsection 1 is normal cases, subsection 4 is continuous supply of goods, subsection 7 is sale on approval or return basis. If it is sale on approval or return basis, we need to see 6 months from the date of removal or date of supply, whichever is earlier. What is the date of supply? The date of acceptance by the recipient, whichever is earlier is taken as the due date of invoice. In case of continuous supply of goods, first you need to check whether the payment is based on account statement or irrespective of account statement. If the payment is based on account statement, whenever the account statement is issued and for in that account statement how much ever amount is there, that account statement date will be taken as the due date of invoice. If the payment is received irrespective of account statement on some ad hoc basis, then whenever the payment is received, that will be taken as the due date of invoice. Whereas in case of normal goods, subsection 1, check whether it is supply involving movement of goods or supply does not involve movement of goods. Supply involving movement of goods means under the contract of supply, goods are taken from one location to another location. Only when the goods movement terminates, the supply terminates, then it is supply involves movement of goods. We need to see the due date of invoice as at the time of removal. If supply does not involve movement of goods, which means the goods are moving but it is not under a supply, then in that case it will be date of delivery. So whenever the goods are delivered, that date will be taken as the due date of invoice. Next, services, subsection 2 and 5 and 6. Subsection 2 is normal cases, subsection 5 is continuous supply of service, subsection 6 is cessation of service. In case of cessation of service, whenever the service abruptly stop, immediately upon cessation, if at all there is any proportionate amount to be retained by the supplier, to that extent they need to give the invoice, that is the due date of invoice immediately upon cessation. In case of continuous supply of service, a service which takes more than 3 months to complete. For continuous supply of goods, we don't have the time limit. Continuous supply of goods is that there will be successive supply of goods for which the payments are settled on a periodical basis. Whereas in case of continuous supply of service, definition is there, a service which takes more than 3 months to complete and involves periodic payment obligation. Just because it takes more than 3 months, it will not become continuous supply of service if there is a single payment. Just because there are multiple payments, it will not become continuous supply of service if the period is not more than 3 months. So it should take more than 3 months and should involve periodic payment obligations. Then we need to check whether the due date of installment is ascertainable from the contract. If yes, the due date of installment will be taken as the due date of invoice. If the due date of installment is not ascertainable from the contract, but the payment is linked to completion of event, like construction contract, upon completion of first floor, upon completion of second floor, like that it is mentioned, then whenever the event is completed, that is the due date of invoice. If nothing is there in the contract, whenever the installment amount is received, that is the due date of invoice. Whereas in case of normal services, other than these two, so we need to check whether it is banking or insurance. Banking or insurance within 30 days from 45 days from the date of completion. For all others, it will be within 30 days from the date of completion. And this is the point which I was referring to, GST implications on voucher. Voucher recognized by RBI, treat as money not a supply, not recognized by RBI, treat as actionable claim and not a supply. Therefore, vouchers are neither goods nor services but treat as consideration against supply of goods or services. And there is a voucher issuer. What that voucher issuer will do, he will be selling the vouchers to the distributors or dealers. That distributors or dealers in turn will sell the vouchers to corporate or end customers. For example, a company wanted to buy Amazon vouchers. So that Amazon vouchers, if they need to buy, if they directly go to the website of Amazon and if they buy, they have to pay full amount. But there are some dealers. What these dealers will do, so they will be getting a margin. So for example, 100 rupees voucher, they will get at 80 rupees. And that 80 rupees, they will keep some 10 rupees or 15 rupees as a margin and give it to corporates for 95 rupees. So still the corporates are enjoying the benefit of 5 rupees. So these dealers, so they will buy the Amazon voucher for 80, no GST on this because it is a sale of voucher. Principal to principal transaction. Again, the distributor or dealer is selling it at 100 rupees to the corporate end customers. Again, no GST. Even though they are getting a margin of 20 rupees, they are not required to pay GST on that because it is on a P2P basis, that is principal to principal basis. Whereas, if they work on a agency model where they need to distribute the vouchers for which they get a commission, then in that case, that commission will become supply under 71A. So, voucher issuer is the principal and the distributor or dealer is the agent. Corporate or end customer, the agent is selling the voucher, that sale no GST, but for doing this distribution, this distributor or dealer will get a commission or fee that will be chargeable to GST. And services provided to voucher issuer, for example, there is a voucher issuer and they need to do the marketing, for example, Sodexo vouchers, etc. and all, they need to do marketing for which they approached you and you did the marketing services to them. So that will be covered under supply chargeable to GST. In case of breakage, that is expiry of the voucher. So voucher will expire. When the voucher expires, so it will not be redeemed. So then the money retained by the voucher issuer will not be subject to any GST in that case. initially a voucher issuer has given you a voucher for say 2000 rupees and you gifted it to some other person, that some other person did not redeem the voucher, then in that case this 2000 rupees which is there with the voucher issuer will be consideration, but there is no supply against that. So due to that reason GST not payable on the same. In case of breakage, that is expiry of voucher, as the same is not redeemed even though amount is received against such voucher, GST not payable on the amount retained. So this is the summary of this discussion. RBI recognized the prepaid instrument PPIs. So RBI recognized the prepaid instruments, GST not applicable, it will be treated as money. Non-PPI vouchers, so again GST not applicable because it is treated as actionable claim. Principal to principal sale, no GST because it is not a supply. Agency distribution, GST payable because on the commission received. Additional service also subject to GST on service charges. Expired vouchers breakage, no GST because supply did not take place against this. And September 25 they did not ask any question on vouchers. Yes, they did not ask. Mark it as very important. Definitely it will come. Okay, open challenge pa. Definitely one question will be there on vouchers for sure. If not, na, call me after exam. So time of supply in case of goods and services. So section 12 and section 13 deals with the time of supply in case of goods, time of supply in case of services. And here subsection 1 deals with liability to pay GST is determined on the basis of time of supply. And subsection 2 we have time of supply in case of FCM. So goods FCM will be 12.2, service FCM will be 13.2. What does 12.2 says? If it is specified actionable claims or a person under composition scheme, we need to take time of supply as actual date of invoice, that is given in the question, the date on which invoice is issued. Due date of invoice, just now we discussed that, and the date of payment is the date of payment, that is also given in the question. Whichever is earlier will be taken as the time of supply. So GST is payable on advances definitely because date of payment is one of the date for determining the time of supply. Whereas in other cases, other than composition scheme or specified actionable claim, we need to take only two dates, actual date of invoice or due date of invoice, whichever is earlier. Actual date of invoice will be the date on which invoice issued, that is given in the question. Due date, it's what you need to determine. So therefore GST not payable on advances. Why? Because date of payment is not a date. So GST not payable on advances. And time of supply in case of FCM for services. For services, check whether invoice is given within the due date. If invoice is given within the due date, then it will be date of invoice, that is actual date of invoice or date of payment, whichever is earlier. If invoice is not given within due date, we need to take the back date. What is that back date? Completion date. Date of completion or date of payment, whichever is earlier, should be taken. And in both the cases, date of payment is given, which means GST is payable on advances. So only thing you need to refer whether invoice is given within due date or not. For that you need to refer the due date of invoice, which we have seen previously. Then subsection 3. Subsection 3 is the area, so wherein like be careful with respect to that. I think already they asked the question in the last attempt, but maybe in MCQ somewhere they will connect it. So 12 subsection 3 is goods RCM. Goods RCM, very, very simple. We need to see the date on which goods are received by the recipient. Always we need to see from the recipient point of view time of supply, because RCM liability is on recipient. So the date on which recipient has received the goods, the date on which recipient has made payment to the supplier, or 31st day from the date of invoice given by the supplier. 31st day from the date of invoice given by supplier should be taken. These 3 dates, whichever is earlier. What if supplier is not giving invoice? We don't have any provision there. We don't have any provision there. What if supplier has not given invoice? In case of goods, the supplier may be unregistered and the transaction is covered under RCM. Supplier may not issue invoice. Then don't take this. Don't take this. That is the date of receipt of goods, the date on which payment is made to supplier. 31st day from the date of invoice by supplier, don't take. Then what we should take? We have a proviso which says that if you cannot determine time of supply under this, any of these one point is not available, the date of entry in the recipient book should be taken. So here, if invoice not issued by supplier, in this case for 12 subsection 3, if invoice not issued by supplier, 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 then date of entry in the books of recipient, in the books of recipient, date of entry in the books of recipient is time of supply. If invoice is not issued by supplier, date of entry in the books of recipient is the time of supply. What if that is also not available? Then residual provisions. If this information is also not available, then we need to move on to residual provisions, because we have 12 subsection 5. residual cases that should be taken. Okay, keep that in mind. Then when it comes to services RCM, what should be taken? If invoice is given by supplier, the date on which payment is made to supplier or 61st day from the date of invoice by supplier. Okay, so it is by supplier. Date on which payment is made to supplier or 61st day from the date of invoice by supplier should be taken. Okay, should be taken. This is when if the invoice is given by supplier, because now there is an amendment. What is that? In case of service under RCM, where the self invoice is given by the registered recipient to the unregistered supplier, the date of issuance of such invoice or the date of payment, whichever is earlier, will be taken. So now we have two provisions, updated provisions. Previously it was always invoice given by supplier or recipient 61st day, but now they have changed it. If the supplier is giving invoice, date on which payment is made to supplier or 61st day from the date of invoice by supplier, whichever is earlier. If invoice is not given by supplier but the invoice is given by recipient to supplier, date on which payment is made to supplier constant, but instead of 61st day we need to take date on which recipient issues the self invoice, and by when they need to give, within 30 days from the date of receipt of goods or services, but they can give beyond that any time also. Don't take the due date by which they need to give invoice. See the date on which self invoice is issued, whichever is earlier will be taken as the time of supply. But in the suggested answer for September 25 exam, they have given one alternative. That alternative is like you take 30 days from the date of receipt as the date of self invoice, and whichever is earlier like that they determine. You don't have to take that. That is anyhow they gave it like an alternative answer only, but actually in exam we should see the date on which self invoice is issued. Self invoice is issued, that should be taken. Then next one, time of supply in case of vouchers. So subsection 4. So subsection 4. So this will be the last attempt where they will be asking the question. I don't think so you will get a question on vouchers because they omitted it. New Finance Act, they have omitted it. Identifiable voucher at the time of issuance of voucher, non-identifiable voucher at the time of redemption. Okay, so identifiable voucher, whenever the voucher is issued, on that day itself we need to assume that the goods or service are supplied against this voucher and we need to pay GST. Non-identifiable voucher, whenever the goods are, like whenever you redeem the voucher against supply of goods or service, that date should be taken. Then time of supply not ascertainable as per above. Then mostly in case of aviation etc., where periodical return has been filed, due date of filing such return. Where periodical return is not required to be filed, date of payment of tax. Who is required to file periodical return? So definitely the person who is registered. And who is not required to file? Unregistered. So registered person, the due date of return, unregistered person, the date of payment of tax. Subsection 6, interest, late fee or penalty for delay in receipt of consideration. Whenever the interest is actually received, on actual basis GST is payable, that is on receipt basis. Then additional points, what will be considered as the date of payment? Date of payment in case of supplier, date of entry in the books or date of credit in the bank account, whichever is earlier. In case of recipient, date of entry in the books or date of debit in the bank account, whichever is earlier. In case of goods, other than composition scheme or specified actionable claim covered under RCM, on advances GST is not payable, and GST payable only upon invoice, as the time of supply is due date of invoice or actual date of invoice, whichever is earlier. But in case of service under FCM, definitely GST payable on advances. Then there is one point, up to 1000 rupees received in excess beyond the invoice. For example, if the invoice is 13,200 rupees, but the customer paid 14,000 rupees, for this 800 rupees, what is the treatment? For that 800 rupees, this month is the date on which payment is received, and for this 800 rupees in future we are going to give the invoice as per normal provisions, whichever is earlier will be this month itself. Whereas we have an option, that is, if the excess is up to 1000 rupees, that is 800 rupees is within 1000 rupees, we can go based on invoice itself. So next month or future we are going to give invoice now. At that time itself we can pay GST on this 800 rupees. Up to 1000 rupees received in excess of invoice in case of services. Definitely for service only this point is applicable, and for goods under composition scheme or specified actionable claims, because there only now we need to pay GST on advances. Wherever we pay GST on advances, there this provision will be applicable. Time of supply can be the date of invoice. For that excess amount, whenever in future we give invoice, that, or determined as per section 13(2), that is normal provisions, supplier has the option to choose. In case of supply of service between associated enterprises under section 92A of the Income Tax Act, but the supplier is outside India, recipient is in India, it's an import of service. Import of service is covered under RCM. So we need to see the date on which payment is made to supplier or the date on which invoice is issued by the recipient, self invoice is issued by the recipient, because here supplier outside India, he will definitely not be giving invoice, the recipient only will be giving the invoice, so that should be taken. But we have a proviso which says that for associate enterprises, don't check anything, the 61st day from the date of invoice or date of self invoice, etc. Simple, the date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier. Then when goods are taken outside India for exhibition, is it supply or not a supply? Definitely it is not a supply when the goods are taken outside India for exhibition. However, if the goods are not brought back within 6 months from the date of removal, then section 31 subsection 7 sale on approval point will come and it will become deemed supply and we need to raise invoice accordingly. Then time of supply in case of change in rate. When this change in rate point is applicable, remember this change in rate point is applicable only for services or composition scheme, goods, specified actionable claims. Only for 3 people, only this is applicable. What about supplier of goods other than composition scheme and specified actionable claim? The section 14 is not applicable. The time of supply will always be actual date of invoice or due date of invoice, because we have a notification, that is notification 66 of 2017. You have to remember that notification 66 2017. So based on that, it will be taken. So therefore see this, time of supply in case of change in rate applicable only in case of services, also applicable in case of composition scheme and specified actionable claim. First point, you need to check whether the completion is before change in rate or after change in rate. If the completion is before change in rate, so then invoice date or payment date, whichever is earlier, should be taken. So some completion before change in rate, invoice date or payment date, whichever is earlier, will be taken. Suppose if the completion is after change in rate, definitely for your attempt I don't think so they will be testing, but for May exam definitely they will test because of the changes in rates, etc. and all. So therefore don't worry about it, they will not ask this, but you need to learn. So before change in rate, whichever is earlier. Suppose if the completion is after change in rate, if both invoice and payment before change in rate, whichever is earlier, one before one after, it will be whichever is later. Just 3 points only you need to remember here. Just check the completion date pa. Completion is before change in rate, then lock it. Invoice date or payment date, whichever is earlier. Suppose if the completion is after change in rate, lock it. Now check when the invoice and payment both are before, whichever is earlier. One before, one after, whichever is later. What should be considered as the date of payment for section 14? Check whether payment is credited within 4 working days from the change in rate. If the payment is credited within 4 working days from the change in rate, then we need to take entry date or credit date, whichever is earlier. Very, very important. 4 working days from the change in rate. Then entry date or credit date, whichever is earlier. Suppose if the payment is not credited within 4 working days from the change in rate, then in that case, date of credit, date on which it is actually credited, only should be taken as the date of payment. That is this point. Then we have 2 circulars on time of supply. Already this has been tested relating to HAM and other thing. So that's why this is not important. Just quickly I will tell you. In case of HAM contract, that is hybrid annuity model contract. So what will happen is that the builder will lay down the road for National Highway Authority of India, for which National Highway Authority will pay the consideration. In this contract, they are not only required to do the construction, but they are also required to do the maintenance of the road. So therefore, definitely it will qualify for a continuous supply of service, because they are going to take more than 3 months to complete it, and this contract will be for some 5 years, 10 years, 15 years like that. So no doubt it is a continuous supply of service. Then how to determine the time of supply? So we need to see whether invoice is given within due date or not given within due date. Invoice given within due date, we need to take date of invoice or date of payment, whichever is earlier. If invoice not given within due date, completion date or payment date, whichever is earlier. So now what is the completion date? Is it the actual date of completion of the project? No, it is the deemed date of completion, that is the date on which due date arises, due date of installment. The due date of installment itself will be taken as the date of completion for that particular installment. The due date of installment will be taken. So due date of installment is considered as the date of completion for that particular installment, and accordingly we need to determine. What if the due date of installment is not ascertainable? Definitely it will be given, because it is a contract between the builder and NHAI. So wherein milestone payments, like whenever the payment has to be made, everything will be clearly drafted. So that due date of installment will be taken as the date of completion. Then in case of spectrum allocation charges, So what is the time of supply in that case? Here also just one line you remember, whenever the payment is due or whenever the payment is received, whichever is earlier will be taken as the time of supply. Simple. Spectrum allocation, who is doing? Department of Telecommunication. To whom? Telecom companies. Either it may be upfront option or it may be installment option. Whatever the case may be, whenever the money is due or whenever the money is paid, whichever is earlier. So GST liability arises whenever the payment is made or payment is due, whichever is earlier. And where we will get the information about payment due? There is a frequency assignment letter issued by Department of Telecommunication. So in that the details will be there, but don't consider that as the tax invoice. So we completed time of supply and we are moving on to place of supply. So place of supply in case of goods is given under section 10 and 11. If it is import and export, section 11. If it is other cases, section 10. In case of services, if both are in India, section 12. If one in India, other outside India, section 13. What if both are outside India? The place of supply not applicable. Moreover, that service is exempted. If both supplier of service and recipient of service outside India, all service are exempted. So place of supply is not required to be determined in that case. Then section 10 says that there are total 5 situations given. 10(1)(a), supply involves movement of goods, and 10(1)(b), bill to ship to transaction. 10(1)(c), supply does not involve movement of goods. 10(1)(d), goods assembled or installed at site. 10(1)(e), supply on board a conveyance. In this, 10(1)(a) and 10(1)(c) has got 2 points, B to B, B to C. In all other places, we have only one provision. 10(1)(a) says supply involves movement of goods. B to B, ending point should be taken. B to C, location of recipient in the records of supplier, otherwise location of supplier. Whereas 10(1)(c), supply does not involve movement of goods. B to B, we need to take location of goods. Location of goods at the time of delivery or at the time of supply. Whereas B to C, same, location of recipient in the records of supplier, otherwise location of supplier. And under the contract of supply, if goods move from one location to another location, then it is supply involves movement of goods. Otherwise, supply does not involve movement of goods. For example, I am a seller who is located in Tamil Nadu, you are a buyer located in Kerala, and I have a ship which I am selling. The ship is in Mumbai, Maharashtra. And I just gave you the documents, you take the delivery of the ship. There is no movement of goods. Supply does not involve movement of goods. B to B, what is the location of goods at the time of delivery? So it is Mumbai, Maharashtra. That will be taken as the place of supply in this case, like that. So location of goods. What if it is B to C? Then in that case, location of recipient in the records of supplier Kerala, or that is also not there, location of supplier will be taken. That is this part, 10(1)(a) and 10(1)(c). Then 10(1)(b). B for bill to ship to transaction, B for billing address. In case of bill to ship to transaction, billing address will be taken as a place of supply. That is, I am delivering the goods to a third person on your instruction. You are the billing address, that other person is the shipping address. So therefore, I will not take shipping address as my place of supply. The billing address only will be taken as my place of supply. Now you are the billing address. You in turn will raise invoice to the shipping address. That will be supply involved movement of goods. So that will become 10(1)(a), place of supply under 10(1)(a). But movement of goods may not be caused by you. Movement of goods can be caused by you or by recipient or any other person. So anyone can cause the movement of goods. But what we need to see is that, is it supply involving movement of goods? Yes. So in bill to ship to transaction, usually there will be 2 transactions. One between the original seller and the billing address. Second between the billing address and the shipping address. That is this. Then 10(1)(d), goods assembled or installed at site. So location of such assembly or installation will be taken as the place of supply. Wherever it is actually assembled or installed should be taken. And 10(1)(e), supply of goods on board a conveyance, that is during the journey. Now you see the starting point of that goods, location where the goods are loaded should be taken. Whenever there is a conflict between 10(1)(d) and E versus 10(1)(a)(b)(c), then 10(1)(d) and E will prevail because these two are specific provisions, whereas A-B-C is general provision. For example, I am selling a generator to you and you are asking me to install it in your branch in Karnataka. So here if you see, the location of the recipient is Tamil Nadu only, whereas the place where I need to install is in Karnataka. Now I raise invoice to you and I deliver the goods in Karnataka. If you apply bill to ship to transaction, then it will be billing address Tamil Nadu will be taken. But if you go for 10(1)(d), location of installation, that is Karnataka, will be taken, which will prevail, as it is location of installation 10(1)(d), that is a specific provision that will prevail over the general provision. Therefore, location where it is installed should be taken, that is Bengaluru, Karnataka should be taken as the place of supply in this case. That is this. In case of conflict between ABC over 10(1)(d) and E, then 10(1)(d) and E shall prevail. So, specific provision will prevail over general provision. Then section 11, in case of import, location of importer, not location where it is imported, location of importer. For example, a person from Telangana is importing the goods in Visakhapatnam port in Andhra Pradesh. Even though the goods are imported in Andhra Pradesh, but the location of importer is Telangana, so Telangana will be taken as the place of supply. And export, in case of export, always location outside India will be taken as the place of supply. Then what is the place of supply in case of sale to unregistered person through e-commerce platform? In case when the sale to unregistered person through e-commerce platform, definitely supply involves movement of goods, because through e-commerce you place the order, I need to deliver the goods from my location to your location. So supply involves movement of goods. B2B or B2C, it is B2C. Location of recipient in the records of supplier should be taken. But the problem is that I have two address. One is your billing address, another is the delivery address. And it is not a bill to ship to transaction, because it is not a different person, the same person, but billing address is there, delivery address is there. Why it will differ? Maybe you are belonging to some other state, but you are staying in Chennai. So you belong to Andhra Pradesh, but you are staying in Chennai. So in your Amazon account, so billing address will be Andhra Pradesh, but now you are staying in Chennai, so you will place an order to Chennai. So therefore, as per the records of Amazon, there will be two address, billing address and delivery address, which should be taken delivery address. Delivery address should be taken as a place of supply. Don't apply bill to ship to transaction here. What is the difference between bill to ship to and this point? Bill to ship to, billing address is different person, shipping address is different person. Here the same person but two address, billing address and delivery address. So if billing address and delivery address match, then no issue. If the billing address and delivery address does not match, then delivery address record on the invoice should be taken. And address need not be full address, just the name of the state is mentioned in the invoice, that is sufficient. Name of state on invoice is sufficient to be considered as recording the address of the recipient. Then, in case of services, if supplier in India and place of supply is determined under section 13, and if it is in India, already we saw that it will never come under intrastate supply, but it will be treated as deemed interstate supply, as reference for intrastate is only with respect to section 12. Then, place of supply in case of services, section 12 and 13, concentrate. First we need to see general provisions. The first thing that you need to apply is general provisions, and general provisions is applicable in case of special provisions not there, that is specific provision is not available, then we will apply general provisions. So 99% of the cases general provisions will be applicable, okay, unless specific provision is there. So therefore, if worst come scenario, if you don't know place of supply, you write this general provision at least rather than skipping the answer. But at final level and all, you cannot take it for granted. So you have to learn to the extent possible, try to learn and go for the exam. So subsections and all you don't have to focus, just the provision. Provision, if it is 12, what is the place of supply? If it is 13, what is the place of supply? This is our focus should be. So general provision in case of 12. B2B, location of recipient. B2C, location of recipient in the records of supplier, otherwise location of supplier. Simple. In case of 13, we need to take location of recipient in the records of supplier, otherwise location of recipient in the records of supplier, otherwise location of supplier. As simple as that. And in 13, we don't have B2B, B2C classification. This is the general provision. Then the next thing that we need to know is that, so there are only three places where B2B, B2C classification will arise. What are the three places where it will arise? So TOT, section 12, B2B, B2C. Section 13, we don't have B2B, B2C classification. So we have only single provision. Whereas in case of section 12, we have B2B, B2C. Many times it will prick in our head as to when B2B, when B2C. You need to check whether it is TOT, training and performance appraisal service, organizing an event, transportation of goods or passengers. There only we have B2B, B2C confusion. B2B always in that place. The moment it is these three, any of these three services, B2B always location of recipient, no other point. Then, so therefore you need to remember from now on only if it is B2C provision, because you know what is B2B, location of recipient, that is training and performance appraisal, organizing an event, transportation of goods or passengers. Whereas the next thing that we need to know is the situation. Based on situation itself, you try to remember property related services. What will be taken? Location of property is the place of supply. Let it be 12 or let it be 13. Property location will be taken. And in case of 12, we have one special point. What is that? If the property is outside India, then location of recipient will be taken as a place of supply. Like that is there only for 12. Same similar way for organizing an event also we have. For organizing an event also, generally where the event is held, that will be the place of supply. But here also one point is there. If the event is held outside India, then location of recipient should be taken like this. Only in two places we have like this. So property related services, location of property. Event related services, organizing an event, location of event. But in these two, what is common in 12? If the property outside India, event outside India, location of recipient. Then next, for other services like admission to event, no way there is a difference. It is same location of event. Easily you can remember event related services, location of the event. For admission to event, for organizing an event only we discussed. For admission to event always location where the event is held. We don't have any other confusion. So whether this special point like event outside India, location of recipient is applicable for admission to event? No. For admission to event always location of the event only will be taken. Same way services on board a conveyance also, starting point of the conveyance, that is common between 12 and 13. Starting point of the conveyance, starting point of the conveyance. Then transportation of goods, transportation of passengers. In case of 12 we have B2B, B2C. B2B already we know location of recipient. So you remember only B2C. So what is that? Starting point of goods, starting point of passenger, easy. Starting point of goods, starting point of passenger. Transportation of goods, starting point of goods. Transportation of passenger, starting point of passenger. Whereas in case of 13, so for goods we have general provisions. 13 it is for passenger, starting point of passenger, no change. Here also starting point of passenger, here also starting point of passenger. For goods alone we have general provisions. Then next, we have to remember three places under section 13. We have location of supplier as the place of supply, and for 12 we don't have any provision, so general provisions. These are the three places. R, B, I are for renting of other than aircraft or vessel, renting of any motor vehicle other than aircraft or vessel up to a period of 1 month. Number 2, banking services to account holders. Number 3, intermediary services. In these three places under section 13, the location of supplier is the place of supply. For 12 parallelly we don't have any provision, so which means general provisions will be applicable. So that is this. So hiring of means of transport other than aircraft or vessel up to 1 month, location of supplier. Whereas 12 general provisions. Then B, banking and other financial service, location of supplier if it is given to account holders. And in case of 12 general provisions, what if the condition is not satisfied? Banking services not to account holders. Wherever condition not satisfied, general provisions. Banking service not to account holders, general provisions. Hiring of aircraft or vessel, general provisions. Hiring of other than aircraft or vessel beyond 1 month, general provisions. Because you need to remember clearly the condition. Hiring of motor vehicle other than aircraft or vessel up to 1 month. If it fails, general provision. And banking service to account holders, if it fails, general provision. Intermediary services, location of supplier. Got it? In these three places, if the condition fail, also general provision. Parallelly for 12 also it will be general provisions only. Next, then we need to see performance based services. Performance based service in relation to individuals, location of performance. You should remember location of performance. When 12 will be applicable? 12 will be applicable for 4 services. Training and performance appraisal, restaurant, beauty treatment, etc. Training and performance appraisal, food and beauty. Okay, training, performance appraisal, food, beauty. 4 place only location of performance. In that one point is there, training and performance appraisal, we need to check for B2B, B2C. That already we studied in the beginning itself, that B2B, B2C we need to check. So you need to remember only B2C provisions. Okay, so I am making an effort to simplify this, and as much simple as you can, you should remember this. That's why. Okay, so food, beauty, training, performance appraisal, location of performance. In other places we don't have provisions, so general provisions. Whereas section 13, definitely location of performance. What is the condition? Physical presence of the recipient required. What if physical presence of the recipient not required? General provisions. So in the absence of that condition, it will be general provisions. Then performance based service in relation to goods. So definitely in case of section 12, we don't have any provision, so general provision. For 13, location of performance. This is what? Performance based service in relation to goods. But for performance based service in relation to goods like repairs, etc., so you have to remember, if the physical presence of the goods is required, location of performance, but we have 4 exceptions. What are the 4 exceptions? If goods are temporarily imported for carrying out repairs or process and it is exported after repairs or process without put to use. Number 2, that is pharmaceutical sector carrying out research activities on the medicines imported. Number 3, repair and maintenance service in relation to aircrafts used for business purpose, repairs and maintenance in relation to ships used for business purpose. In these 4 exceptional cases, we need to take location of recipient only, otherwise it is location where service is actually performed. Whereas if physical presence of the goods is not required, always location of goods. Physical presence of goods not required, location of goods. Physical presence of goods required, performance, location. These 4 exceptions, place of supply will be location of recipient. Then OIDR service, general provisions, location of recipient. So you can remember easily general provisions, because anyhow location of recipient is there in general provision na. So then next one, telecommunication including broadband and DTH. If it is 13, we don't have any specific provisions, so general provisions. First you need to see for 12, fixed line equipment location, mobile postpaid billing address, mobile prepaid dealer address, online recharge, it will be general provisions. Fixed line equipment location, postpaid mobile billing address, prepaid mobile dealer address, online recharge, we don't have any provisions, so general provisions. Advertisement service to government, again here we don't have any general, like we don't have any specific provision under 13. These two places we don't have any specific provision, so general provision. In case of 12, each state where the advertisement is provided should be taken. And what is the meaning of intermediary? Basically intermediary is the one who facilitates or arranges the main transaction. So there is a transaction between one person to another person, and the intermediary will just connect these two people. He will not undertake to provide the service. If he undertakes to provide the service, it is outsourcing, that is not coming under intermediary services. Intermediary will just connect the seller and buyer and he will come out of the transaction. So an intermediary is someone who arranges or facilitates the supply of goods or services or securities between 2 or more persons, wherein 2 of them transact in supply of goods or service, the main supply, whereas he will arrange or facilitate the main transaction. Therefore, outsourced activities do not fall under intermediary services. That's it, over. And I have given one 5-minute video in my YouTube channel related to place of supply. In 5 minutes, I have explained place of supply in case of services. That 5-minute video about this only. Whatever I said now, the same thing is there. So as many number of times as you can hear, you listen to it. Okay. And I am also planning for that quick bite series throughout this month also. Okay. Like at frequent intervals, I will put like quickly certain things. Okay. How easily we can remember like that, 5 minutes. So what you need to do is that whenever you feel like bored, you just listen that 5 minutes video, that is sufficient. Not more than that. I'll ensure that exactly 5 minutes, not more than that, because we have only shorts. No, shorts is the order of the day. So therefore 5 minutes. That 5 minutes you don't have to listen in 1.5x speed. Okay. Then IGST rules related to place of supply. Rule 3 is applicable in case of advertisement services to government. So when the advertisement service is to government, each state where the advertisement is provided should be taken as a place of supply. However, in this regard, we need to remember, what if the advertisement is in more than one state? We need to know the base of apportionment. That base of apportionment, if it is advertisement on train, you see the length of track. All this is basis of apportionment. If you use your common sense, like overheads chapter in costing, you will be able to remember this. Okay. So you need to know the base of apportionment, length of track. In case of advertisement on train, length of track. In case of advertisement on the backside of the train tickets, number of stations in each state. Suppose if it is advertisement on television, number of viewers based on BRC, Broadcast Audience Research Council. What if the viewers data is pertaining to more than one state? Based on population census, you divide. Then advertisement in SMS, what data should be taken? Telecom subscriber data given by TRI. And suppose if it is advertisement in internet, deemed to be across the country and divided based on internet subscriber data, only 5. So advertisement on train, length of track. Advertisement on train ticket, number of stations. Advertisement on TV, SMS and internet is there. Apart from that, any other advertisement, the base of apportionment will be expenditure ratio, GAAP. The expenditure ratio should be taken, means their income should be recognized based on their expenditure, that is this. And in case of SMS and in case of TV, we need to take the figures, even internet, we need to take the figures of the last week of the given quarter, and that will be used for the succeeding quarter. If the data pertains to more than one state, ratio of population will be used. Then next, rule 4 and 8, that is property related services. So location of property will be taken as a place of supply. What if the property is in more than one state? If it is accommodation services, what is the base of apportionment? Number of nights stayed in each state. If it is accommodation in houseboat, number of hours in each state. And suppose if it is any other accommodation services, carpet area ratio, area of immobile property ratio needs to be taken for apportionment. Rule 5 and 9, event related services. For event related services, location of event will be taken as a place of supply. What if the event is in more than one place? Then we need to take each state where the event is provided, but we need to apportion it? We need to apportion it based on expenditure ratio. But in this regard, there is one very important point which is tested many times in exam, that is event partly in India and event partly outside India, section 13 subsection 6, the entirely it is deemed to be in India. Got it? So one question they have asked, not for previous exam but before that exam, for May exam they have asked this question, that is one marriage event. In that marriage event, reception is in one place, marriage is in another place, and it is section 13. So when partly in India, partly outside India, for that service entirely it should be deemed in India if it is against a single contract. In India, if it is more than one state, then we need to take each state, but the expenditure ratio to be followed for division. Then rule 6, that is internet or broadband or DTH or telecommunication, if it is fixed line, we need to take location where it is installed. And suppose wide a single contract, if the installation points is in many places, for example, internet lease line provided to a bank, we need to see a number of installation points in each state, and that should be taken as the base of apportionment. Number of installation points. Then rule 7, last one, that is performance based service in relation to goods. So location of performance will be taken as the place of supply. Wide a single contract, for example, AMC services. What if the service is in more than one state? Then whether it is same goods or different goods, you check. If it is the same goods, equal ratio. If it is different goods, check the goods ka invoice value ratio, and in that way you need to divide. Suppose if it is performance based service in relation to individuals, JAP, that is generally accepted accounting principles, expenditure ratio. Actually this particular rules, I don't think so it will be tested in exam, because they have given it as an annexure in the study material. In the study material they did not give in the regular flow, they gave it like an annexure. Means as a student you should be knowing this, so they have given. I don't think so it is asked, because of which like last few attempts I have not asked any question on this, okay. But it is there in study material, so I just quickly discuss this with you. Then clarifications. So we have first step, concentrate. I'll give you the background of this. I'm making export of services. When I'm making export of services, the contract price is $5,000, but I did not receive $5,000. I have outsourced it to some other person outside India. So that place only. So my recipient given me $3,000 and given $2,000 to that outsourced person. Now in that case, even though I received $3,000, but $5,000 will be taken as the export of service. Provided for the $2,000, I pay GST under RCM, because on my behalf only he is providing the services, means he will raise invoice for me. So means that is a import of service. So if I pay $2,000 import of service, my export of service will be for $5,000. That is this circular. Then place of supply in case of cargo handling services. You know what? All circulars, place of supply will be general provisions. Okay. All circulars, the place of supply will be general provisions. But what you need to write in exam is why general provisions is applicable, which other provision is not applicable, that you need to write. So in case of cargo handling service, what is the place of supply? General provisions. Which other provision not applicable? It is not service in relation to immobile property. So don't apply that. General provision to be taken. Because cargo handling is not mere renting of immobile property, they are acting as a custodian for our goods, so general provisions to be applied. Then what is the place of, where is the place of supply in case of software testing on prototypes imported? We imported some prototypes on which we are doing the testing. So what is it? I mean not on the prototypes, on the software on which this prototype will function. On the software the testing is done. Is it performance based service in relation to goods? No. Again general provisions should be taken, because we are not doing anything on the goods imported. We are doing testing on the software with which this prototype will function. So it is software testing. So part of software development services. So general provisions will be applicable, because for software services we don't have any specific provision. Then where is the place of supply in case of cutting and polishing on unpolished diamonds imported? So we have one exception. If goods are imported for carrying out process and it is exported after the process without put to use, anyhow exception is there that location of recipient will be taken as place of supply, but it is not location of performance. Then next, place of supply of advertisement on hoarding. Already this has been tested. That is, there is an immobile property owner who is giving the property for the advertising agency to place his hoarding. So definitely it is property related services. So service in relation to immobile property. The advertising agency which placed the hoarding there will in turn be providing the sale of space for advertisement to some companies to display their advertisement. That will be general provisions. What if the property owner directly enter into contract with the brand name owner, that is with the client directly? Now in that case, so it is still property related service only. So there is no advertising agency in between. So the end user directly enter into contract with the property owner to place their hoarding, service in relation to immobile property. If there is an intermediary called advertising agency, then property owner to advertising agency will be property related services, whereas advertising agency and the client will be advertising services. For advertising we don't have any specific provision, so general provisions will be applicable. Then place of supply in case of co-working spaces. So if only space is given on rent, co-working space, it is service in relation to immobile property, where the space given on rent is not the primary purpose. The primary purpose is giving the IT infrastructure, because IT infrastructure is only costly than this space. The space will be hardly 5,000 to 10,000 per month, but the IT infrastructure like servers, data centers, computers, internet access, everything, so that will be somewhere like 50,000, 60,000 per month. So definitely it is not treated as service in relation to immobile property, because IT infrastructure is being shared. So therefore it will be coming under general provisions. So additional service provided by supplier relating to hosting and IT infrastructure services, then general provision should be taken. Then place of supply in case of data hosting services. So the data hosting service provider will host the data of their customer and they will be giving access to the customers of the customer. For example, I am the data hosting service provider. My customer is Netflix. Netflix data I am hosting in my server and I am giving access to the customers of Netflix. And will I become intermediary, that I am acting as an intermediary between Netflix and their customers? No, because I undertake to provide the service. Hosting is a continuous service, so it is not an intermediary service. Okay, and they give me the hard disk which I need to connect to my server. Will it come under service in relation to performance based service in relation to goods? No, because here even though they are giving me the hardware and which I am connecting to my server, but this hardware, on the hardware I am not doing any service, so it is not performance based service in relation to goods. Number 3, as I am giving the storage, I mean server access, will it come under service in relation to immobile property? No, because immobile property is not the main activity here. There are innumerable activities involved in case of hosting of the data, so it is not service in relation to immobile property. So conclusion, it will be general provisions. Okay, so these 3 provisions not applicable. Intermediary service not applicable, performance based service in relation to goods not applicable, and we should not apply service in relation to immobile property. Even ICA knows that the answer for every question will be general provisions, but they will check this. What you have written is what they check. Then next, where is the place of supply in case of advertising agency services to a foreign client, where the advertising agency provide comprehensive advertising services. For example, I am an advertising agency. Apple has approached me to promote their brand in India, for which I need to speak with the media owners for the purpose of broadcasting the Apple's ad. I am doing the designing of the Apple ad and I am approaching the TV channels for displaying this ad. Now the TV channels, I will make the payment, and along with my service charges, that payment what I have made to TV channel also I will be recovering it from Apple. Now will I be called as an intermediary? No, because I am not just collecting the money and remitting it to them. I am providing services, my own service of designing the advertisement also, strategizing the advertisement also. I am not an intermediary. Then it will be treated as general provisions, normal advertising services. The advertising agency is providing service to foreign client on principal to principal basis and not acting as an intermediary. So it will be general provisions. And it may also qualify for export of services. Where is the place of supply in case of custodial services offered by banks or financial institutions to foreign portfolio investors? Whether foreign portfolio investors will hold the account with the bank? No, bank will just do the custodian job, and for which they will not open any account for the foreign portfolio investors. So it is not services to account holders. Only if banking service to account holders, section 13, location of supplier will be taken. In this case, it is not to account holders. So general provisions, you need to write that the foreign portfolio investors will not be called as the account holders of the bank. Consequently, place of supply will be as per general provisions, like that. Okay. Next, section 13.6. This is a section, a very important section. Mostly we will ignore it in the application. So there are 4 services: service in relation to immobile property, performance based service in relation to goods, performance based service in relation to individuals, organizing an event. For these 4 services, if it is partly in India, partly outside India, fully in India, no issue. India is a place of supply. Fully outside India, no issue. Place of supply is outside India. The only problem is partly in India, partly outside India, because while creating this provision, they were smoking something, that's why. So partly in India, partly outside India. Why a single contract? Entirely it will be in India. Why like that? They only knows why it is like that. So but you have to remember, place of supply will be India, deemed to be in India, and thereafter we need to divide. What if it is not? Why a single contract? It is separate contract. Then separately to that contract we need to divide. But why a single contract? If it is partly in India, partly outside India, then deemed to be in India. So it is like, so GST law, there are many stupid provisions. Without knowing the reason why it is created, they have added it because they copy pasted it from many countries. IC also will not use its brain. So wherever the provisions are so confusing, they create question on that and they will be torturing us. Okay. Then section 14.1, liability to pay GST in case of import of OIDR services by NTOR. So import of OIDR service by non-taxable online recipient, the supplier outside India will pay GST, but difficult to find the supplier outside India. So all these suppliers are connected to the intermediaries, that is Play Store, App Store or Microsoft Store. That's the reason why that intermediary outside India, they are fixing the liability. So the primary liability is on the intermediary. If the conditions are not satisfied, then the liability will be shifted on the supplier, that is original supplier. You just assume that there is a game developer. That game developer is the original supplier and Play Store is the intermediary. So Play Store also outside India, game developer also outside India. The primary liability is on Play Store, and if that conditions are not satisfied, then the liability will be shifted to the game developer. So first, import of services, supplier outside India, game developer, recipient in India, non-taxable online recipient, because in case of games, definitely the recipient will be non-taxable online recipient only, an unregistered individual for personal purpose, and the place of supply will be location of recipient, that is India, so it will be taxable under RCM. First we need to check whether there involves an intermediary. No, means directly we go to their server and we play the games. Like we have lot of game developers, directly we access their server and we play, like PS5 games, and then this Minecraft, etc. Through server itself we play the game, their server itself, even GTA, so through their server. Then in that case there is no intermediary, so naturally who will pay GST? The original supplier only will pay GST. Yes, there involves an intermediary, but where is that intermediary? Is outside India? No, intermediary is in India, then definitely original supplier only will pay GST. If the intermediary is also outside India, mostly like mobile games where Play Store, App Store, etc., then in that case the intermediary will pay GST. However, if the intermediary does not satisfy all the conditions, means satisfies any one condition, then intermediary will pay. If the intermediary is not satisfying all these conditions, then original supplier will pay. What is the first condition? If intermediary raises the invoice, or if the payment is collected by intermediary, or delivery authorized by intermediary, or terms and conditions fixed by intermediary, any one condition satisfied, intermediary will pay. All the conditions not satisfied, the original supplier will pay. Example, Netflix. Netflix, you are downloading the app in your Play Store into your mobile. For that, is there any invoice? No, because it's a free app. There is no invoice. Invoice not raised by intermediary. Second, you cannot make the payment to Play Store for activating Netflix subscription. you need to go to their website to activate, which means the Play Store is not collecting money from you. So payment not collected by intermediary. Number 3, delivery is not authorized by intermediary. For example, same username password you give it to 10 different people, and if they watch, so that particular parallel screen viewing, etc., all those restrictions will be fixed by the Netflix only. Play Store will not fix any such conditions. So delivery not authorized by intermediary, terms and conditions not fixed by intermediary, which means the original supplier only will pay. Who is the original supplier? Netflix. They only will pay GST in this case. If any one condition satisfied, intermediary shall pay. This portion in our last class we discussed. With this we completed place of supply. So value of supply also we have completed, and input tax credit also we have completed. We'll take a break and then we will continue with composition scheme and other aspects. We'll meet after 10 minutes. Okay, we'll start. So there is one query, sir, an exam compulsory question. If question is silent, whether we need to check rule 86B always? Yes. So rule 86B we need to check always. We need to see the taxable turnover. If the taxable turnover exceeds 50 lakhs in a particular month, and that too if the ITC balance is more than the liability under FCM, we need to check for that rule 86B, and that is a hidden adjustment. We need to look for it. So purchase of gold online like Digi Gold, but sale after some time with profit and withdraw money comes under actionable claims. No, that will be coming under sale of gold. So sale of Digi Gold is also equated with sale of gold. So the same treatment will be applicable, because Digi Gold only thing, you are just storing it in a digital space, but that does not mean that it will be coming under either securities or actionable claim, etc. Then next, supply between SEZ and DTA, whether it falls under 75E or 75B, 75B. So because supply to SEZ or supply by SEZ will be 75B, and there is a misconception to many people that SEZ is export. No, SEZ is not export. So whenever you are making sale to SEZ, it is not export. Even under Customs Act also it is not export. As per SEZ Act 2005 also it is not export. But purchases from SEZ is treated as deemed import. So the person who is in DTA is required to pay customs duty along with IGST. For example, you are buying from SEZ. So SEZ will not pay any GST. You have to pay customs duty, treating it as deemed import as per SEZ Act 2005, and you need to pay IGST along with customs duty. Then look into this segment 10 composition scheme. And composition scheme, we have two composition schemes. Again, it is one area which will not be tested final level and all. Maybe in MCQ like 2 marks like that it will be asked, or in IBS it will be tested. So there are two types of composition scheme under 10.1 and 10.2a. To whom this composition scheme under 10.1 is applicable, and the purpose of composition scheme is to charge the GST at the reduced rates. So even though the regular rate of GST is there, but if you are under composition scheme, you will be charging GST at reduced rate. What are the two disadvantages of composition scheme? Number one, you cannot take ITC on your inward supplies. Number two, whatever composition tax that you pay, you cannot recover it from your customer, because of which your profit per unit gets affected. But the advantage of composition scheme is that the sales volume increases, because of which the total profit will increase. And one more advantage for composition scheme is that the compliance cost get reduced. And the composition schemes are to 10.1 and 10.2a. 10.1 composition scheme is applicable to manufacturer, trader or supply of food service provider, whereas 10.2a composition scheme is applicable for manufacturer, trader or any service provider. And if you are under 10.1, you can be either manufacturer, trader or supply of food service provider. Still you can provide some other services also, but there is a restriction. You can provide service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. But under 10.2a, no such restriction. Any service can be provided, any amount of service can be provided. And 10.1 is applicable for a person whose aggregate turnover during the previous year does not exceed 1.5 crores. For 8 states, it will be 75 lakhs. That is MMTN, SAM. Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya. Then it will be 75 lakhs. Whereas for other states it will be 1.5 crores, that is 150 lakhs. What if you are doing business in 2 states, one in the other states, one in MMT and USAM, then the limit will automatically come down to 75 lakhs should be taken. For example, you are doing business in Tamil Nadu and Nagaland, the limit will automatically come down to 75 lakhs. You need to check for 75 lakhs limit. And then in case of 10.2a, we don't have any such restriction like that, different states and all. Any state you are in, if your aggregate turnover during previous year does not exceed 50 lakhs, then you will go for composition scheme under 10.2a. And what is the benefit of reduced rates? If you are under 10.1 composition scheme and if you are a manufacturer, you need to pay 1% on total turnover. If you are a trader, 1% on taxable turnover. Even the services up to 10% limit also is there, na? That is also 1% on taxable turnover. So 1% on taxable turnover in case of trader or service provider up to limit. One study material question is there. Subbalakshmi Foods, like that one question. In that question, what they did, that 10% limit of service also, they took the rate applicable to the restaurant, which is wrong. Actually, it should be 1%. In that question, 130 lakhs is under composition scheme as a restaurant. 10 lakhs is supply of farm labor. What they did in that question, 140 lakhs into 5% they have taken. Actually, the correct answer is 130 lakhs into 5%. That 10 lakhs is supply of farm labor which is exempted. So that will be coming under services other than restaurant service, for which the rate will be 1% on taxable turnover. as supply of farm labor is exempted, that 10 lakh should not be subject to GST, but steady material they made a mistake with respect to that. You be clear and you quote Rule 7. Rule 7 of CGST rules talks about the rates. All these rates is given in Rule 7. And if you are a supplier food service provider, what is the rate of GST? 5% on total turnover. So manufacturer 1% on total turnover, supplier food service provider 5% on total turnover, trader or service provider up to the limit allowed 1% on taxable turnover. Whereas under 10(2)(a), always it will be 6% on total turnover. And what is the current year limit for the reduced rates? So 1.5 crores or 75 lakhs, and here it will be 50 lakhs. So if you observe this, definitely for a manufacturer, supplier food service provider or trader, 10(1)(a) only is best, 10(1) only best. 10(2)(a) because the limit also less and the rate is also high. So therefore, who will go for 10(2)(a)? A person to whom 10(1) is not applicable, or 10(1) is applicable but they want to render service beyond 10% limit, then they will go for 10(2)(a). And what are the difference in conditions? A person who is under compositions 10(1), there are few restrictions, and all these restrictions we need to check for the current year in which composition scheme is opted. What are the restrictions? Remember, S9 RCM. Section 9 is RCM. S9 RCM, yes, for services other than supply of food or beyond 10% limit. They cannot go for 10(1) composition scheme other than restaurant or beyond 10% limit. And N for non-resident taxable person outside India to India who is not having physical place of business in India, they cannot go for composition scheme. Interstate supplier of goods or services and non-taxable supplies, that is alcoholic liquor, petroleum products, and supplier of services through e-commerce operator. However, supplier of goods through e-commerce operator can opt for composition scheme. But very, very important, supplier of services through e-commerce operator liable to deduct TCS under section 52. This point can be tested in MCQ. There is a restaurant. That restaurant is providing supply of food through Swiggy or Zomato. Whether composition scheme they can opt. Yes or no? Yes or no? Yes. They can opt for composition scheme. Why they can opt for composition scheme? Because in case of Swiggy, Zomato, TCS is not applicable. They are required to pay GST under 9(5). Wherever 9(5) is applicable, TCS is not applicable. Therefore, supplier of services through e-commerce operator can definitely go for composition scheme if the e-commerce operator is not liable to deduct TCS. If the e-commerce operator is liable to deduct TCS only, this is not possible. Okay. Then next one, R for RCM under 9(4), non-paid stock held as on the date of opting for composition scheme. So RCM 9(4) is applicable in case of promoter or builder who is making purchase from unregistered person. If they have some non-GST paid stock from unregistered person, they cannot go for composition scheme. Also, casual taxable person who is coming from other state to this state cannot opt for composition scheme. Manufacture of certain notified goods, that is ice cream, edibles, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. These are the notified goods. Manufacture of these notified goods cannot opt for composition scheme. And this above non-applicability of composition scheme is equally applicable for 10(2)(a), except that service provider can go for composition scheme. Therefore, for 10(1), what is the restriction? S9 RCM. For 10(2)(a), it will be 9 RCM. And then one more point you need to understand here is that, so manufacture of notified goods, not trader of notified goods, only manufacturer of notified goods. A ice cream shop which is selling ice cream can definitely go for composition scheme. The restriction is only to the manufacturer. Then, so therefore, what is the difference in conditions? Here S9 RCM, here 9 RCM. And next one. So composition scheme is optional. If composition scheme under 10(1) is not applicable, they can opt for 10(2)(a). Disadvantages of composition scheme is that they cannot avail ITC and cannot charge GST to recipient. Suppliers who are making supply to promoter or builder also cannot opt for composition scheme. That is, there is a promoter or builder who is making purchase from unregistered person. So they need to pay GST under RCM at the rate of 18%, 28%, cement, etc. and all. So what they will do, they will ask the supplier to go for composition scheme and automatically supplier will become registered. Now the promoter or builder will buy from a registered person. So not allowed. So whenever you are making sale of any goods to the builder or promoter who is covered under 9(4), so you cannot register under composition scheme, you can register only under normal scheme. So this is one point. Suppliers who are making supply to promoter or builder and 9(4) cannot opt for composition scheme. GST payable under RCM at the normal rates, even though they opted for composition scheme. That is, if I am under composition scheme, I have some inward supplies. On my inward supplies, if it is covered under RCM, I need to pay the regular rates only, not under composition scheme on my inward supply under RCM. Only for outward supplies, it will be the composition scheme rate that is applicable. And we need to understand three turnovers here. So there are three turnovers. One is aggregate turnover for determining the eligibility to opt for composition scheme. Another one is turnover for determining 10% limit. Third one is turnover for payment of GST under composition scheme. First, aggregate turnover for determining the eligibility for composition scheme. We need to take 5 plus and 3 minus. The regular meaning of aggregate turnover will take taxable supply, exempted supply, non-taxable supply, zero rated supply. 4 plus and 2 minus, that is inward supply under RCM and taxes. Whereas this is the regular meaning of aggregate turnover. Whereas aggregate turnover under composition scheme, so one more plus will come. That is pre-registration turnover will be included. So 5 plus. Taxable supply, exempted supply, non-taxable supply, zero rated supply, even pre-registration turnover. So before getting registered, some turnover will be there. That will also be counted into your aggregate turnover for determining the eligibility for composition scheme. And 3 minus, what is that? Inward supply under RCM, taxes and interest. Interest on loans, advances, deposits. In the entire composition scheme chapter, interest on loans, advances, deposits should be excluded for all the turnovers. So that point will be common. So you can see there, aggregate turnover for determining eligibility for composition scheme, we need to check that for the previous year, because previous year aggregate turnover does not exceed the limit. Current year you can go for composition scheme. So previous year we need to check. And basis, all India basis. Taxable supplies will be included, exempted supply will be included, interest on loans etc. will be excluded, and non-taxable supplies is included, exports also included, interstate supply also included. But sir, I should not make interstate supplies now. How it will be included? All the restrictions is for the current year. Means previous year we can have non-taxable supply, previous year we can have exempted supply, previous year we can have non-taxable interstate, anything. But current year only that S9 RCM is applicable. So that's why previous year if you have, it will be included. Inward supply under RCM excluded, GST group also excluded, and pre-registration turnover is included. Just 8 points if you remember, that is sufficient. Then what is the difference from aggregate turnover for determining the eligibility to opt for composition scheme to turnover for computing 10% limit? Aggregate turnover ATO, turnover is TO, A is missing, so all India is missing, got it? So which means turnover is computed on a state-wise basis, and turnover for 10% limit we need to see previous year turnover, and basis is state-wise. Otherwise everything is same, copy paste. Whatever we have seen for aggregate turnover, the same is applicable for turnover. Only difference is that aggregate turnover is on all India basis and turnover will be state-wise. Then next, turnover for payment of GST under composition scheme. We need to see current year turnover, because current year only we are going to pay GST under composition scheme, and whether that will be state-wise or union territory-wise, that will be state-wise only. And what are all the changes you see? So here we should not take pre-registration turnover, because pre-registration turnover you are not having any liability, so no need to pay. For example, this is the current year in which you started the business, previous year it was 0, so current year definitely up to registration, say your threshold limit is 40 lakhs, up to 40 lakhs you are not required to pay GST. After crossing 40 lakhs only you will go into composition scheme. Means pre-registration turnover should be excluded, because on that you are not going to pay any GST. For example, current year you commence a business and 240 lakhs is your aggregate turnover. In that 240 lakhs, what is the turnover under composition scheme? 150 lakhs. What is the turnover under normal scheme? 90 lakhs. In this 150, first 40 lakhs no need to pay GST. So remaining 110 lakhs you will pay GST under composition scheme. So that's what I told you, pre-registration turnover should be excluded. So first 40 lakhs no GST, remaining 110 lakhs only GST under composition scheme, not remaining 150. Whereas after you cross the overall limit of 150, remaining 90 is there, not 240 minus 150. On that 90 lakhs we need to pay GST under the normal scheme, because the moment you cross the 150 lakhs limit, you will be coming into normal scheme. So that's why pre-registration turnover will be excluded. And one more point, non-taxable supplies, exports and interstate supplies not applicable. Why not applicable? Current year if you are making this, you are ineligible for composition scheme, so that's why it is not applicable. This is the meaning of various turnovers, and all the turnover points I have given at the end of this book. At the end of this book, like various turnovers, meaning of various turnovers I have given. So all the turnovers which we come across in GST, I gave in one place. You can just go through that. Page number 302. Page number 302. First, aggregate turnover for determining the eligibility for registration. So taxable supplies, exempted supplies, non-taxable supplies, then zero rated supplies should be taken. Inward supply under RCM will not come, GST will not come. What about the old indirect taxes? Old indirect taxes should be included in the aggregate turnover. Interest on loans, advance deposits, yes. Interest on account of delay and receipt of consideration also, yes. And it will be computed on what basis? All India basis. and we need to see for registration during the current year. Interstate supplies also will be included. Pre-registration turnover not applicable because for registration only you are going to determine. Whereas aggregate turnover for determining eligibility for composition scheme, what are the changes that we have? So that is aggregate turnover for determining eligibility for composition scheme. We will see previous year turnover, will not see current year turnover, so we will see previous year turnover, and pre-registration turnover should be included. So what are all the changes that alone you highlight? So that is previous year we take, pre-registration turnover included, then interest on loans, advances, deposits will not be taken into account. So that is the difference from aggregate turnover for registration to aggregate turnover for determining the eligibility for composition scheme. Then aggregate turnover for determining eligibility for composition scheme to turnover for computing 10% limit. What is the difference? Everything is same. Only difference is that, so this will be computed state-wise, whereas this is on all India basis, but it will be computed state-wise. That is the only difference, and remaining and all will be same, copy paste. Then next one, what is the difference between turnover for computing 10% limit versus turnover for payment of GST under composition scheme? What is the difference? That is, you will not have non-taxable supplies, and next you will be not taking pre-registration turnover, and even interstate supplies should not be there, and you need to see it for the current year. You need to see it for the current year, and interstate supplies should not be there, and even non-taxable supplies should not be there, and next pre-registration turnover will be excluded. Then what is the difference between turnover for payment of GST under composition scheme to taxable turnover? Everything same, only thing is that exempted supplies will not be taken. There taxable supplies, exempted supplies, everything will be taken, but for a trader will pay GST on taxable turnover, so exempted supplies should not be taken, and rest of the information and all will be same. Then next, what is the turnover for computing reversal of ITZ and distribution of ITZ by ISD? So that you remember, normal aggregate turnover only, just like aggregate turnover only it should be taken. So whatever we have seen as aggregate turnover, the same should be taken here, but there are some changes in this. That is, taxable supply will be taken, exempted supply will be taken, non-taxable will be taken, inward will not be taken, GST will not be taken. Old indirect taxes will not be included in the turnover for rule 42, 43 and section 20. Interest, yes, it will be taken, interest on account of delay in payment, and this will not be all India, it will be registration wise, and whether we need to check it for the current period, yes, monthly, because we need to take the ITC on a monthly basis only na, even ISD, rule 42, rule 43, so therefore we need to see it for the month. Interstate supplies will be there, and pre-registration turnover is not applicable. Then finally, what is the turnover for computing refund of unutilized ITC in case of zero rated supplies and inverted tax structure? In case of zero rated supplies, refund of ITC, the formula will be net ITC into zero rated turnover divided by adjusted total turnover. Whereas in case of inverted tax structure also we have a formula, net ITC into inverted turnover by adjusted total turnover. What is that adjusted total turnover? This adjusted total turnover is also in line with aggregate turnover. This adjusted total turnover is also in line with aggregate turnover, but there is a slight difference. What is that? That is, taxable supplies will be taken, but exempted supplies will not come. Why exempted supplies will not come? Because exempted supplies should not be taken in the denominator for refund, because net ITC is not for exempted supply, net ITC is only for taxable supply. So while doing zero rated divided by adjusted total turnover, in the denominator adjusted total turnover, exempted supply should not be taken, it should be taken out. As exempted should be taken out, even non-taxable also should be taken out, and inward supply anyhow will not come, GST will not come, old indirect taxes will be included, interest will be included, and this is also registration wise, and it will be done on a monthly basis. Interstate supplies, yes, and it is not applicable. Sir, I have a doubt, sir. That is, you are telling interest on loans, advances, deposits should be included, but interest on loans, advances, deposits is exempted, and when you take in denominator adjusted total turnover, you said exempted should not be there. How come interest can be there? Because for the purpose of ITC, interest on loans, advances, deposits, even though exempted, but will be treated as taxable. That's the reason why while doing the denominator in refund chapter, because the refund chapter adjusted total turnover is based on the ITC, net ITC. So therefore, in the denominator, adjusted total turnover, whether interest should be taken, yes, but other exempted turnover should be removed, because interest on loans, advances, deposits. If you want, you just write here itself that even though it is exempted, okay, this point, even though exempted. So this particular point, even though exempted, but treated as taxable, even though exempted for payment of GST, but treated as taxable, for ITC purpose, So this is the meaning of various turnovers, and definitely it will be very much helpful for you. So whenever you do the problems, etc. and all, you refer to this chart and accordingly you do the solutions based on this. So this is connected to composition scheme we discussed. Now come back to composition scheme. Yes. So these are the meaning of aggregate turnover, etc. and all. So what is the meaning of aggregate turnover for determining the eligibility? We discussed page number 117. Then person opting for composition scheme can provide service up to 10% of turnover. We need to see 10% of turnover, and remember turnover will be state wise. So don't take aggregate turnover multiply 10%. See the state wise turnover. For example, I am doing business in Andhra Pradesh, Tamil Nadu and Karnataka, and my turnover in Andhra Pradesh is 60 lakhs and Tamil Nadu is 30 lakhs. Karnataka is somewhere like 20 lakhs. Now what is my aggregate turnover? Aggregate turnover will be 110 lakhs. So what you will do, current year, what is the limit up to which service provided means, don't take 110 lakhs into 10%, 11 lakhs or 5 lakhs, whichever is higher, because we need to compute it state wise. So for AP it will be 6 lakhs, for Tamil Nadu it will be 5 lakhs, for Karnataka it will be 5 lakhs. That is the limit up to which services can be provided. So the answer will be 16 lakhs. Okay, not 11 lakhs. So to the extent of 16 lakhs I can provide service, but this 16 also not in total. In Andhra Pradesh I can provide service up to 6 lakhs. In Tamil Nadu I can provide service up to 5 lakhs. In Karnataka I can provide service up to 5 lakhs. If I cross that limit, I am disqualified in one state. If I am disqualified in another state, in other states also I am disqualified, because it is all in all out. Then that is this point. And the tax rate applicable for this service is 1% of taxable turnover. Other procedural provisions, if they are already registered and now they are going for composition scheme, they need to do CMP2. But remember, CMP2 they can submit only before commencement of the financial year, means they can opt for composition scheme only before commencement of the financial year. What if they are not already registered? Now only they are getting registered, they can make an application for registration, and any time during the financial year they can opt for composition scheme, and they need to display composition taxable person in every notice signboard displayed at the principal place of business and additional place of business, and they need to file a quarterly return in CMP8 by 18th of the month following every quarter, and even GST also they need to pay by that time. And remember, for a person under composition scheme, time of supply provisions will be applicable, which means they need to take due date of invoice, actual date of invoice, or date of payment, whichever is earlier. Are they required to pay GST and advances? Yes. So while doing the turnover computation, what we need to see, first see what is the value of bill of supply during the quarter, bill of supply generated during the quarter, minus advances which is received in the previous quarter, for which bills are already raised in the current quarter. You should take out, because the advances would have been taxed last quarter itself. Add advances received during the current quarter, for which the bill of supply will be raised in future, we need to add. So therefore GST payable on value as per bill of supply during the current quarter, plus advances received during the current quarter pertaining to next quarter, minus advances received during the previous quarter pertaining to the current quarter, and they need to file an annual return in GSTR4 by 30th June of succeeding financial year. All in all out, that is either composition scheme or normal scheme for all registrations of a person. They cannot choose normal scheme for few registration and composition scheme for other registration. And also few registration 10(1) and few registration 10(2) also not possible. For example, I am having two businesses in two different places. One is into restaurant, another is into some consulting services. For restaurant I want to go for 10(1). For consulting services 10(2)A, not possible, because if I am under composition scheme also, again I should be under 10(1) only in all the places. or 10-2A only all the places, but not both. Few registrations under 10-1, few registrations under 10-2A is not possible, and this we have discussed. Validity of the composition levy. If all the conditions are satisfied, option will remain valid. If the conditions are not satisfied, you need to exit from the composition scheme whenever you breach the condition, and the time limit for that exit is 7 days. 7 days is the grace period within which you need to submit that CMP4 to exit from the composition scheme. The date on which you submitted the form, that is the date on which you have exited from composition scheme. From that date onwards, on all your outward supplies, you need to pay GST under regular scheme. So pay tax as a normal taxpayer, issue invoice for taxable supply within 7 days. File form GST CMP4 as intimation. Self withdraw anytime you can file this form, and you can exit from the composition scheme voluntarily. And if you are crossing the limit, or if you breach the condition, for example you made interstate supplies, or you made supply of services through e-commerce operator, but still you continued in the composition scheme, and the department will identify that you are breaching the condition but continuing in the composition scheme. First the officer will give you a notice, and the notice is in CMP5. Thereafter within 15 days from the notice, you need to give reply in CMP6. Thereafter within 30 days from the reply to the notice, they will pass an order. That order will be either allowing you to continue with the composition scheme or denying the composition scheme. Suppose if they gave an order denying the composition scheme, whether it is prospective or retrospective, it can be either prospective or it can be retrospective, but not before the date you committed the breach. Then next one, so whenever you exit from the composition scheme and go to normal scheme, you will avail the ITC on closing stock as per 18(1)(c), and you need to file ITC1 form within 30 days from the date of exit from composition scheme for availing the ITC on inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, and on capital goods. So these are the various forms. CMP2 is for entry into composition scheme. When you need to enter into composition scheme before commencement of the financial year, and whenever you enter into composition scheme, you need to reverse the ITC on closing stock. So you need to file ITC3. What is the time limit by which ITC3 should be filed? Within 60 days from the commencement of the relevant financial year. ITC3 will also be filed for one more purpose, that is whenever your taxable supply became exempted, but for that they have not given time limit. Only for normal scheme to composition scheme only they gave the time limit, but taxable supply became exempted, they did not give time limit. So therefore only in this place we have 60 days from the date of commencement of relevant financial year. CMP4, CMP4 is intimation to withdrawal from the scheme within 7 days of occurrence of event, and whenever you withdraw you can avail the ITC. So the ITC1 needs to be filed within 30 days from the date of withdrawal from the composition scheme. Next, CMP5 notice. Notice, no time limit. Whenever they identify, they will give. Reply to notice within 15 days, and issue of order within 30 days of receipt of reply. CMP8, return to be filed by a person opting for composition scheme within 18 days. 18th of the month following every quarter. Whether denial of composition scheme is prospective or retrospective, already we saw that. When it is advisable to go for 10-2A, whenever 10-1 is not applicable, or 10-1 is applicable but you want to render services beyond 10% limit. So these are the points we have related to composition scheme. Look into the next area, that is tax invoice, debit notes and credit notes. So we have various documents. Already we saw the due date of invoice. Here tax invoice who will be issuing, is it shall or may? Shall. Tax invoice is mandatorily to be issued by the supplier to the recipient, and tax invoice is in case of taxable supplies of goods or services, and registered person, supplier is registered, they will give tax invoice within the time limit which we saw previously. Suppose if the supplier is unregistered and the recipient is registered and the supplier is covered under RCM, then the recipient will give the self invoice to the supplier within 30 days from the date of receipt of goods or services. In this regard, one important point you need to remember, if the supplier is registered but only for deducting TDS, they should be treated on par with unregistered person. So the recipient should give the tax invoice to the supplier. For example, there is a government department which is registered only for deducting TDS. Now that government department is making sale of used goods or confiscated goods etc. to a registered person, which is actually covered under RCM notification number 4 of 2017. So now you are the registered person who is purchasing from the government department. So government department is registered for TDS. You are also registered for TD. You are also normally registered. Actually you need to pay GST under RCM. Whether you need to give self invoice or they will give you normal invoice, you should give self invoice. because even though they are registered for TDS, you treat them as unregistered only for this purpose. Only for this purpose, that is for self-invoice. Only for self-invoice you need to treat them as unregistered, and the recipient who is registered should give the self-invoice within 30 days from the date of receipt of goods or services. That is this point. Then bill of supply. Bill of supply is in case of exempted supplies, and even for a person opting for composition scheme, bill of supply is mandatory. A registered person who is making exempted supply or a registered person who is under composition scheme should give bill of supply. What is the time limit? Same time limit of tax invoice. Who will be giving it? Supplier will be giving it to recipient. So recipient giving it to supplier, like that we don't have the concept here. Then invoice come bill of supply when a registered person is making both exempted supplies and taxable supplies in a single transaction to an unregistered person, B to C. Only then invoice come bill of supply, single document will be given. Time limit same as tax invoice, due date, and supplier will be giving it to the recipient. And there is one point, in case of low value supply, that is value of supply less than 200, neither tax invoice nor bill of supply. Less than 200, not equal to 200, less than 200, and 3 conditions should be satisfied. Condition number 1, it should be B to C supply, means sale to an unregistered person. Condition number 2, the recipient do not require tax invoice. Condition number 3, a consolidated invoice or bill of supply should be generated at the end of the day. And in case of entry to multiplex theatre, even though the value is less than 200 rupees, even though it is B2C supply, but definitely invoice needs to be issued. In that case, the e-ticket is deemed to be the tax invoice. Then debit note, section 34, it is not may, it is shall. Debit note should be issued. When the debit note is issued, only one situation, that is value or tax in invoice. Value or tax in invoice is less than the actual value or tax. Means in the invoice we have reported lesser value or lesser tax, and we need to collect more value or more tax. In that case, we will be giving a debit note. Recipient shows debit balance in supplier books. Whenever there is an increase in the debit balance, debit note will be given by supplier to recipient. Whenever debit note is issued, what will happen to the liability of the supplier? Liability of the supplier will increase. And what will happen to the ITC of the recipient? It will also increase, because based on the debit note, recipient can take ITC. Is there any time limit to give debit note? No, because government's revenue is going to increase. That's why time limit is not there. Whereas credit note is there a time limit? Yes. Credit note, 2 important points you see. So you will find the hypocrisy of the government, that debit note is shall but credit note is may. Whereas debit note there is no time limit, but credit note there is a time limit, because it is a loss of revenue to government. Whenever credit note is issued, what will happen to the liability of the supplier? It will get reduced, and the reversal of ITC will take place for the recipient. What is the time limit for credit note? 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. What are the 5 places where we come across this time limit? Number 1, time limit for availment of ITC, time limit for issuance of credit note, time limit for rectification of GSTR 1, time limit for rectification of GSTR 3B, time limit for rectification of GSTR 8, that is TCS return. In all these 5 places, 30th November of succeeding financial year or date of filing annual return, whichever is earlier. That is this time limit. And can the credit note be issued in case of bad debts? Strictly no. Credit note cannot be issued in case of bad debts. What are the reasons for which credit note can be given? Suppose if the value or tax in the invoice is greater than the actual value or tax, means there is more value or more tax in the invoice, to reduce that the credit note will be given. Recipient will show debit balance in supplier books. Whenever the debit balance decreases, the credit note will be issued by the supplier. And debit note, credit note under section 34 is always issued by the supplier to recipient only, not by the recipient to supplier. In GST, supplier to recipient. And one more reason for which credit note is issued is sales returns. So whenever there is a sales returns. And the third reason is deficiency in the quality. Deficiency in the quality also, there will be credit note. And can we give one or more credit notes or debit notes for single invoice? Yes. For single invoice, multiple debit notes and credit notes can be issued. And for multiple invoices, we can issue a single credit note or debit note. Then next one, revised tax invoice. So whenever a person is liable to get registered and he makes application for registration within 30 days, from the date he is liable to get registered till the date he get the certificate of registration, during that time he need to pay GST on his outward supplies, but he cannot issue the tax invoice. Again I am repeating, whenever a person is liable to get registered and he make application for registration within 30 days, from the date he is liable to get registered till the date he is getting certificate of registration, he need to pay GST on the outward supplies, but he cannot give normal tax invoice to recover the GST because he did not get the certificate of registration in. So after the certificate of registration, within 1 month, he need to give revised tax invoice to recover the GST. May or shall? Definitely may. Easily remember, wherever there is a favorable provision to the taxpayer, it is may. Okay, so therefore revised tax invoice, you can recover the GST. It is good for you. That's why may. So may issue revised tax invoice within 1 month from the date of certificate of registration to him. And suppose if the application is not made within 30 days, then the effective date of registration is the date of certificate of registration. So revised tax invoice cannot be issued because the section says only revised tax invoice can be issued for the period between the effective date of registration and the certificate of registration. What is the effective date of registration? If the application is made within 30 days, the date on which you are liable to register is the effective date of registration. You have to make application within 30 days from the date of liable to register. Then date of liable to register is the effective date. Suppose if the application is not made within 30 days, the date on which you are actually getting registered will be taken as the effective date of registration. That's why revised tax invoice cannot be issued if the application is not made within 30 days. That is this point. And next, receipt voucher. Whenever the supplier collects the advance, what is advance? Any payment that is collected before the invoice is known as advance. In that case, the receipt voucher will be issued by the supplier to recipient, and this particular receipt voucher, is may or shall, because it is evidencing the payment of advance received by the supplier. So that should be given. When it should be issued, immediately it should be issued. Then payment voucher, again payment voucher is shall. Who will be giving payment voucher to whom? Recipient will give it to the supplier. In case of supply covered under RCM, let the supplier be registered or unregistered. If the supply is covered under RCM, the recipient, whenever he makes payment to the supplier, he will be giving payment voucher. Again, it is no time limit, so immediately upon payment it should be done. Whereas refund voucher, concentrate, whenever the supplier received the advance, the supplier will be giving receipt voucher, and invoice is not yet prepared and the supply got cancelled. When the supply got cancelled, the supplier may issue refund voucher, not shall. May issue refund voucher, because on the basis of refund voucher, they can go for refund, because on advance already they would have paid. For example, there is a marriage hall and the marriage hall owner, and you paid 1 lakh rupees as a booking advance, and I have collected 1,18,000 rupees from you. So I have given you a receipt voucher for 1,18,000. So 18,000 is advance. So on that 18,000 I paid GST to government, and thereafter what happened? The booking you have cancelled. When you have cancelled the booking, I have two options. I may refund you 1,18,000 or I may refund you only 1 lakh. If I am refund you 1,18,000 rupees, I need to give you refund voucher, and based on that refund voucher, whatever 18,000 rupees already I paid as GST at the time of advance, I can get it as a refund. Or second option, I may give you refund of only 1 lakh. Now the incidence of tax is on you, 18,000. Now there is one option called as refund to unregistered recipient. So you can claim refund under that ground. Okay, suppose if the tax incidence is on you, you can go for refund claim, refund to unregistered recipient. What is the supporting documentation that is required in this case? The letter of cancellation. The letter of cancellation which is given by the supplier to recipient, and the statement containing the details of advance paid and booking cancelled. So those details are the documentary evidence on the basis of which whatever GST you paid, you can get it as a refund. Got it? That's the reason why refund voucher is may, it's not shall. Then there is something called as delivery challan. And one more point, sir, what if the invoice is already prepared and the supply got cancelled? That is 1,18,000 I collected and I prepared the invoice. Instead of giving you receipt voucher, I gave you invoice itself. Now thereafter the booking is cancelled. The only way is credit note, because before invoice if the supply is cancelled, then only it will be refund voucher. Once the supply is cancelled, thereafter the only document that is possible will be credit note. But again, credit note is may, so credit note is not shall. So is there any option? Yes. Credit note time limit is over. For example, I prepared the invoice for 1,18,000. Thereafter you are telling me, sir, cancel the booking. So then I may refund you 1,18,000 or I may refund you only 1 lakh. Suppose if I refund only 1 lakh to you, then in that case invoice is already prepared. So 18,000 rupees tax incidence is on you. So that 18,000 you will get as a refund to unregistered recipient. Okay, this is common. Whether it is before invoice or after invoice, when the booking is cancelled, whenever the full amount is not refunded, you have the tax incidence. The recipient is having tax incidence. So recipient will claim the refund of tax, whatever they have paid from the government under the grounds of refund to unregistered recipient. Suppose if invoice is prepared and I returned you 1,18,000 fully, which means the tax incidence is not on you, on me. I already paid 18,000. So what will happen to my liability? Again, I have two options, whether it is within the time limit for credit note or not within the time limit for credit note. If the time limit for credit note is not expired, I can give you a credit note. So automatically my liability gets reduced to an extent of 18,000 rupees. Suppose if I am not giving you the credit note because the time limit to issue credit note is over, I refunded full amount to you. Now I have the tax incidence. Under excess payment of tax reason, I can get the refund. Refund on account of excess payment of tax. All these points are there in this chart. You can see page number 125. Page number 125, date of invoice. Before the date of invoice, if the payment is received, that is called as advance. Supplier shall issue receipt voucher to the recipient. If it is goods, GST not paid on advance. Whereas if it is services, GST paid on advance. What if the payment is received balance after the date of invoice? Supplier may issue the receipt voucher to the recipient. Based on the invoice, supplier will pay GST to government, and supplier may issue, because only for payment received before invoice, supplier shall issue. The payment is received after invoice, supplier may issue the receipt voucher to the recipient. Same way, when the amount is refunded before the invoice, then supplier may issue refund voucher to the recipient. And suppose if the supplier issues on the goods, anyhow they did not pay GST in advance, so there is no question of refund. But on services they paid GST in advance, so they will get the refund of GST paid in advance. Suppose if the supplier has not issued refund voucher, which means that they refunded only the value portion, they did not refund the tax portion. So therefore the burden of GST on advance is on the recipient, and such recipient, even though unregistered, can claim refund. Suppose if the amount is refunded or supply is cancelled after invoice, in this case option 1, supplier may issue credit note to the recipient, so automatically liability of supplier gets reduced. But very important point is that full amount should have been returned to the recipient. There should not be any tax incidence on the recipient. Suppose option 2, so full amount is refunded but the credit note could not be issued, then refund can be claimed under excess payment of tax by the supplier. Suppose if the incidence of tax is on the recipient, alternatively recipient can claim refund even though unregistered. That is this debit note and credit note related impact and refund voucher. Delivery challan, again delivery challan in case of movement of goods without involving supply. Goods sent on job work, goods sent from head office to branch office in the same state for which they have not obtained separate registration, or sale on approval or return basis, or they don't know how much quantity they are going to deliver at the time of removal. So in all these cases, the movement of goods should be under the cover of a delivery challan. And whenever the supply actually fructifies in future, at that time they will raise invoice. And delivery challan is shall. Even though in the law they use the word may, but actually the essence is that it will be shall. It is mandatory document. Even though in the section it is may, but for the purpose of e-way bill, delivery challan needs to be carried. In some other place it is given as shall. That's why delivery challan is shall only. And supplier will be giving it to the recipient, not specified the time limit. So as and when the goods are moved, they need to give. Whether recipient details should be mentioned in tax invoice? Of course, yes. If it is B2B, definitely recipient details should be mentioned in tax invoice, whatever may be the value. However, the relaxation is only when the value is less than 50,000. If the value is less than 50,000 and the two B2C, see B2B always required. We need to remember what is the relaxation. The relaxation is less than 50,000, B2C, other than digital services, OIDR or OMG, okay, digital services, OIDR or OMG, then recipient details required only if requested by them. Otherwise, no need to enter. What about OIDR, digital service or OMG? The name of state of the recipient should be mentioned, and such state declared will be taken as the place of supply. Because for digital services, OIDR service or online money gaming, so definitely location of recipient only will be taken as a place of supply. That's why. Then next one, invoice in special cases. Usually in case of banking company, financial institution, NBFC, insurer, the invoice needs to be given within 45 days from the date of completion. In other cases, within 30 days from the date of completion. However, if it is a transaction between distinct persons, insurance, banking or telecom, so by the end of the quarter, the invoice needs to be issued. And GST implications, debit note, credit note, already we discussed what will happen to the liability, etc. And next page you see section 32. So if you are an unregistered person, you are not supposed to collect GST from the recipient. If you collect, that's a violation of section 32. Also, as per section 33, the tax component should be shown separately in invoice. These are the two sections. Then HSN code in invoice needs to be mentioned. The HSN code is a 8-digit code, and in that 8-digit, if your aggregate turnover during the previous year does not exceed 5 crores, you need to enter 4 digits only for B2B supplies. If your aggregate turnover during the previous year exceeds 5 crores, you need to enter 6 digits for both B2B as well as B2C. And for services, it is service accounting code, which is always a 6-digit code. And e-invoice, so obtaining 3 things from the invoice registration portal against a normal invoice is known as e-invoice. So first we need to prepare a normal invoice, we need to upload it in the invoice registration portal, and we need to obtain 3 things. What are the 3 things? Number 1, digital signature. Number 2, invoice reference number. Number 3, QR code. Then it will be called as a e-invoice. And usually invoice needs to be prepared in triplicate and duplicate. For goods it should be in triplicate. So original for recipient, duplicate for transporter, triplicate for supplier. Whereas in case of services, original for recipient, duplicate for supplier. However, wherever e-invoice is applicable, these copies of invoice is not required to be generated. And can the e-invoice be cancelled? Yes. Within 24 hours of its generation, e-invoice can be cancelled. Can e-invoice be amended? No. E-invoice cannot be amended because it is a document which is uploaded. We are not doing any data entry there. So due to that reason, e-invoice cannot be amended, and e-invoice can be cancelled within 24 hours provided its supporting e-way bill is also cancelled. The same point we have in e-way bill as well. E-way bill also can be cancelled within 24 hours of its generation. And to whom e-invoice is applicable? If any person whose aggregate turnover during the previous year, any previous year, from which year to which year, from 2017-18 onwards, exceeds 5 crores, then e-invoice is applicable. Any previous year from 17-18, if their aggregate turnover exceeds 5 crores, then e-invoice is applicable. For B2B supplies or B2C supplies, B2B supplies, that is sale to registered person. However, if their aggregate turnover during previous year exceeds 500 crores, then in that case there is a concept of dynamic QR code in invoice. That is, they need to select the payment only by scanning QR code, and that is applicable for aggregate turnover during previous year exceed 500 crores only for B2C supplies. So that is this point. Previous year does not exceed 5 crores, neither invoice nor dynamic QR code. Exceed 5 but does not exceed 500. E-invoice is required but dynamic QR code invoice is not required. It exceeds 500 crore. E-invoice also applicable. Dynamic QR code invoice is also applicable. Invoice should be in prescribed form, that is INV1. That is the format of the invoice in which it should be prepared. And is it mandatory for persons whose turnover does not exceed 5 crores? No. For not exceeding 5 crores, it is optional. If they want to go for e-invoice, they can go. E-invoice gets auto-populated in GSTR1 and e-way bill portal. Physical copy of invoice not required in case where e-invoice is applicable. And QR code will be there, that can be produced before the officer during the verification in transit, section 129. So when the goods are in transit, proper officer can intercept the vehicle. At that time, the QR code in the invoice can be made available to the proper officer for verification. And type of transaction for which invoice is required, B2B transaction. Let it be B2B FCM or B2B RCM. That is, when I am making sale to a registered person, whether I pay GST or my recipient pay GST, I have to give e-invoice to them. For inward supplies, e-invoice is not applicable. Only for outward supplies, e-invoice is applicable. So self-invoice should be given as e-invoice or normal invoice. Normal invoice. Whenever the supplier is unregistered, the recipient is registered, and the recipient is covered under RCM, they have to give the self-invoice to the supplier. That should be a normal invoice, that need not be e-invoice. Then zero rated supplies, don't check B2B, B2C. Always for zero rated supplies, e-invoice is applicable. Then credit notes and debit notes. So then also, we need to check B2B. Here zero rated supplies refers to what? Mostly export. So export of goods or services. Export of goods or services. Export of goods or services. In that case, always e-invoice will be applicable. Then taxpayer with aggregate turnover greater than or equals to 10 crores. Now it is 10 crores. They have to submit the e-invoice. they need to upload the e-invoice within 30 days from the invoice date. So real time they don't have to do. So they have to do it within 30 days. So normally they will give invoice. So based on the normal invoice, they can do the manual data entry also in GSTR1, and they can give the ITC to the recipient also in 2B. But very important condition is that they have to definitely upload the invoices in the portal within 30 days from the date of invoice. What will happen if they are not generating a e-invoice? The recipient got the ITC na, that needs to be reversed. Whatever ITC that the recipient has availed needs to be reversed, because if a supplier has to give e-invoice but instead gave a normal invoice, even though it is reflected in 2A or 2B of the recipient cannot avail ITC. Means if ITC is already availed, they need to reverse it. Okay, that's the reason why what many people will do, they accumulate it throughout the year and they file it e-invoices in the next year by the annual return. Is it now possible? Yes. If their turnover exceed 5 crores but less than 10 crores. If their aggregate turnover exceed 5 crores but does not exceed 10 crores, that is less than 10 crores, even then e-invoice is applicable for them, but they don't have to upload it within 30 days. For them this 30 days time limit is not there. Leisurely also they can do. So throughout the year, next year, before filing annual return, they will be adding this invoice in the invoice registration portal. But if their turnover exceeds or equal to 10 crores within 30 days from invoice date, they need to upload the invoice in the portal and obtain e-invoice. Then dynamic QR code in invoice. Details required in dynamic QR code. So these are the details should be embedded. Supplier GSTIN, UPI ID of the supplier, bank account and IFSC of the supplier, invoice number and date, and invoice amount with breakup of value and tax. In this, the first three will be static. Supplier GSTIN, UPI ID of the supplier, bank account and IFSC code of the supplier. Whereas the next two will be dynamic. Invoice number and date and value along with tax. And for UPI ID of supplier, there is one exception. What is that? If the payment is collected by e-commerce operator, the e-commerce operator's UPI ID should be there. And bank account and IFSC of the supplier not required if UPI ID is linked with the bank account. And invoice number and date not required if it is retail sales and a unique reference number is given. And invoice amount with breakup of value and tax. Suppose if advance is collected, for that advance there is no condition that it should be collected only by scanning QR code. Only if the payment is collected after invoice, that should be collected by scanning dynamic QR code. So if advance is already collected, then only for the balance amount they need to generate dynamic QR code. Part amount before invoice and remaining after invoice, then only the balance due shall be mentioned. Then exception to mentioning dynamic QR code in invoice. Number 1, if the payment is received before at the time of generating invoice and a cross reference of that payment received. Suppose if the payment is received by cash, mode of receipt cash. If the payment is received by card, mode of receipt card and card ending 4 digits. So like that, if they mention in the invoice, that is sufficient. They have fulfilled the conditions of dynamic QR code. So cross reference of such payment received is entered. In case of cash receipt, the date on which cash is received is mentioned in the invoice. Then another point, suppose if the recipient is outside India, they cannot scan and make the payment, because still there are many countries which are backward than India, that they don't have the UPI payment. Using mobile they cannot scan and pay. They don't know, first of all, what is this, they don't understand, because they were stuck only in the debit card, credit card era only, and they have not updated. What to do? Barbarians. And these people cannot make the payment by scanning the QR code. Okay, so that's why location of supplier in India, at least in one aspect we are great, so we should be proud about it. Location of supplier India, location of recipient outside India, place of supply in India. And here if you observe, supplier in India, recipient in outside India, but the place of supply in India. So it is not an export of service. If it is an export of service, anyhow e-invoice is applicable, but it is not an export of service because place of supply in India, and the payment is received in convertible foreign exchange, but the recipient outside India cannot make the payment, so he can pay normally, so the dynamic QR code is not applicable. Then what are the cases where even though their turnover exceeds 5 crores or 500 crores, e-invoice and dynamic QR code is not applicable? First, for e-invoice, remember biggest. B for banking company, financial institution, NBFC. I for insurance company. G for GTA. Another G for government department or local authority. E for exhibition of film and multiplex theatre. S for SEZ unit. T for not SEZ developer, only SEZ unit. T for transportation of passengers by any mode. These people, even though their aggregate turnover during previous year exceed 5 crores, not required to give e-invoice. Is it these suppliers or these services? These suppliers, for example, there is a banking company. For banking services, they are not required to give e-invoice. They are doing renting of immobile property to a registered person. For that also e-invoice not applicable? Yes. So it is the entity level exemption. It's not the service level exemption. So entity as a whole is not required to generate e-invoice. The same way, who is not required to give dynamic QR code in invoice even though their turnover exceed 500 crores? Remember, big two. B for banking company, same. I for insurance company, G for GTN, not government department, GTA. Then T for same, transportation of passengers by any mode. O for OIDR supplier, located outside India, making supply to non-taxable online recipient in India. Then E for exhibition of film in multiplex theatre. So it is clarified that exemption is available for the entity as a whole. This is the e-invoice process. So invoice process and all is not important for exam. So first the supplier will generate the billing system or ERP system converted into JSON. Thereafter it will be pushed to invoice registration portal. Invoice registration portal will do the deduplication check to check whether the same invoice is already uploaded, and they will be generating invoice reference number, digital signature, add the QR code. From there it will be sent to GST system and e-way bill system. Supplier GSTR1 is updated and 2B of the recipient gets updated. Buyer can view the genuinity of these invoices by scanning the QR code or checking the invoice reference number. And this is important. If a supplier is required to give e-invoice but not issued e-invoice and issued a normal invoice, the recipient cannot avail ITC even though such invoice is reflected in 2A or 2B of the recipient. What they will do in question number 14, they will give some transactions of inward supply. Somewhere in the additional information they will tell invoice pertaining to so and so person reflected in 2B, but the supplier's aggregate turnover exceeds 5 crores. That's it. That's it. Suppliers aggregate turnover exceed 5 crores. Now you need to understand, suppliers aggregate turnover exceed 5 crores but gave a normal invoice, so therefore e-invoice not issued. So even though that ITC is generally eligible, not a block credit, but you should not take that ITC. Okay. Then next one. So this is about tax invoice, debit notes and credit notes. Look into the next area, registration. Registration, we have section 22, 23, 24 which talks about the legality of registration, and these three sections are very, very important. 22, when a person is liable to get registered. 23, when a person is exempted from registration. 24, compulsory registration. And 25, 26, 27 will talk about the procedural aspects, procedure for registration. 26, deemed registration. 27, special provision for CTP, NRTP. And 28, 29, 30 deals with the special cases. 28, amendment in registration. 29, cancellation of registration or suspension of registration. 30, revocation of cancellation of registration. First 22. So when a person is liable to get registered, whenever their aggregate turnover exceeds threshold limit, they are liable to get registered. What is the threshold limit for registration? If they are doing business in a single state and that single state is in MMTN, Manipur, Mizoram, Tripura, Nagaland, the limit will be 10 lakhs. Let it be goods or services. Whereas if they are doing business in single state and that single state is in U stamp, that is Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Pondicherry, then the limit will be 20 lakhs. Let it be goods or services. Whereas if they are doing business in any other state, the limit will be 40 lakhs if they are exclusively engaged in supply of goods. Otherwise, the limit will be 20 lakhs. Remember, if they are engaged in supply of exclusive supply of pan masala, tobacco products, ice cream, edible ice, bricks and roofing tiles, then that 40 lakhs limit is not applicable. What is the difference in this notified goods between composition scheme and registration? In composition scheme, so we have ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. But in registration, that aerated waters is not there. In composition scheme, manufacturer of these goods cannot opt for composition scheme, but a trader can opt for composition scheme. But here in registration, manufacturer as well as trader cannot get the higher threshold limit of 40 lakhs. The lower threshold limit only applicable, that is 20 lakhs will be applicable. Got it? And exclusively, for example, a normal shop is there, a trader, and who is also selling ice cream along with other goods in Tamil Nadu. Can they go for 40 lakhs limit? Yes. Only exclusively engaged in supply of these goods only, they will not get the higher threshold limit of 40 lakhs. It will be 20 lakhs. That is this first 3 points. If they are doing business in multiple states and in that one of the state is in MMTN. So first one is if they are doing business in a single state. Second one, if they are doing business in multiple state. One of the state is in MMTN and the taxable supplies are made from that state. Two conditions. Out of the given state, one state should be MMTN and they should be engaged in taxable supplies in that state. Then the limit will be 10 lakhs. If none of the state is in MMTN U stamp, so all these 10 states, they should not do any supply. They should not do business at all in the states, MMTN U stamp, and they are exclusively engaged in supply of goods, the limit will be 40 lakhs. All other cases, the limit will be 20 lakhs. Aggregate turnover computed on all India basis, not state wise. The 40 lakhs is not applicable the 40 lakhs is applicable only in case of exclusive supply of goods. However, one relaxation is there. If they are exclusively engaged in supply of goods, but they have only one service income, that service income is interest income, still they will be treated as exclusively engaged in supply of goods and the 40 lakhs limit is applicable for them. If the person is engaged in exclusive supply of services or supply of both goods and services, the limit of 20 lakhs or 10 lakhs only should be considered, and 40 lakhs limit is not applicable in the following cases. What is that? A person who voluntarily get registered or a person who compulsorily required to get registered under section 24 because they have to register at any cost, and person making exclusive supply of ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles. So as and when aggregate turnover exceeds threshold limit as discussed above, they are required to get registered. Then 23, exemption from registration. Few cases they are exempted from registration. Number 1, if they are exclusively engaged in making exempted supplies including non-taxable supplies, they are exempted from registration. Now either exempted or non-taxable, but exclusively only that. They should not be doing anything else. Number 2, an agriculturist, but agriculturist only individual or HUF to the extent out of cultivation of land. Number 3, exclusively engaged in RCM supplies other than supply of metal scrap. This point will be tested. First of all, I am an unregistered person. My outward supply is fully covered under RCM. That is, I am an unregistered person making sale of metal scrap to you. You are a registered person. Means fully it is RCM. Then generally I am exempted from registration. Correct. But for metal scrap it is not applicable. Means I have to register as and when aggregate turnover exceed threshold limit. For all others whose outward supply is fully covered under RCM, they are exempted from registration. Then if a person is making both exempted and taxable supply, the above exemption is not available. Then persons who make supply of goods through e-commerce operator is compulsorily required to get registered. However, we have a relaxation. What is that relaxation? If they are making only intrastate supplies and if they are not engaged with the e-commerce operator in more than one state and they declare their permanent account number, address and obtain unique enrollment number. So then even though they are not registered, they can still make supplies through e-commerce operator, but they need to get a unique enrollment number. The moment their aggregate turnover crosses the threshold limit, they need to get normal registration and the UN gets cancelled. That is this. Then in section 22 also there is a compulsory registration, but the point in section 22 is that they have to register, but they can make application for cancellation of registration when their turnover falls below threshold limit. Who are the 3 people who are compulsorily required to get registered under 22? If they are registered under earlier indirect tax regime, they should register under GST law also. If there is any transfer of business, if the transferor is registered, transferee also is required to get registered. Number 3, in case of amalgamation, merger or demerger pursuant to the order of court or tribunal, in all these 3 cases, the transferee has to register and the person should get registered. But the problem is that they can make application for cancellation of registration after getting registered. They can make application for cancellation if their turnover falls below threshold limit. But section 24 compulsory registration is not like that. They have to register at any cost. And even if their turnover falls below threshold limit, they cannot make application for cancellation of registration. Who are they? Remember, I creations. I for interstate supplier of goods, only taxable goods other than handicrafts. Interstate supplier of goods other than handicrafts. C for casual taxable person other than handicrafts. For handicrafts includes handmade goods also. Okay, handicrafts or handmade goods. So they are not required to compulsorily register. Then ICR, R for recipient who is liable to pay GST under RCM 93 recipient. Then ICRE, E for e-commerce operator. Which e-commerce operator? That e-commerce operator liable to pay GST under 95 or that e-commerce operator liable to deduct TCS under section 52. ICRE, A for agent. Remember, agent who is making supply of goods or services on behalf of principal. Generally, agent making supply on behalf of principal, only for goods it is supply na. But even if the agent is acting on behalf of principal, but he is making services, he is also compulsorily required to get registered. Agent making supply of goods or services on behalf of principal. T for TDS deductor under section 51 and I for input service distributor. Then O, 2 O's are there. OIDR, OMG. Both are located outside India and they are compulsorily required to get registered. Then N for non-resident taxable person. Yes, supplier of goods through e-commerce operator other than those who are making only intrastate supplies. Irrespective of threshold limit, a person liable to get registered under 24. And remember, section 23 versus 24, when there is a conflict, section 23 overrides section 24. Section 23 overrides all the sections, but section 24 overrides only one section, that is 22 subsection 1. 22 subsection 1, that is threshold limit. So irrespective of threshold limit, they are compulsorily required to get registered. So whenever there is a conflict between 23 and 24, 23 overrides 24 and they are exempted from registration. These are the three sections, 22, 23, 24. Then 25 talks about procedure for registration. In this procedure for registration, only some key points are there. That points alone you need to focus, and that will be tested in MCQs. First, we have 6 forms, not important and all. So REG1 application, REG2 acknowledgement, REG3 notice, REG4 reply to the notice, REG5 rejection of application, REG6 certificate of registration. But the very important point is that you should make application for registration within 30 days from the date you are liable to get registered. However, in case of CTP, NRTP, when they need to make application for registration, at least 5 days before commencement of business. And once you make application for registration, so you will get acknowledgement immediately, and after you get the acknowledgement for registration, so within 7 working days, either they need to give the registration certificate or they need to give you, the certificate of registration or notice. So see there, REG1 to REG2 immediate, REG1 to REG3 or REG6, either notice or certificate within 7 working days. Say they gave a notice, you need to give reply to the notice within 7 working days. Thereafter, within 7 working days, either they will reject the application or they will give the certificate of registration. All these places, the days is 7 working days. That alone you remember, okay? So anyhow you remember the other things, but 7 working days, not 7 days, 7 working days. Then next one, what is the time limit within which bank details needs to be furnished? 30 days from the date of certificate of registration or date of filing GSTR1. First GSTR1, whichever is earlier, not whichever is later, whichever is earlier. And always whenever the provision says 30 days from means, don't count the from date, you count the next date. Then procedure for registration is not applicable to not you. N for NRTP, for them this procedure is not applicable. OIDR supplier or OMG supplier not applicable. TDS TCS not applicable. U for UIN holder also this procedure is not applicable. And what are the cases where registration is subject to physical verification? This can be tested as a theory question. What are the cases where registration is subject to physical verification? 3 cases. Number 1, if you made application without selecting Aadhaar authentication. Number 2, you made application by selecting Aadhaar authentication but not completed within 15 days from the date of submission of form. Or number 3, you made application by selecting authentication, completed also within 15 days, but based on risk parameter, they wanted to conduct physical verification. In these 3 places, they will definitely do physical verification and then only grant the registration certificate. What is the time limit within which they need to complete the physical verification and give registration certificate? 30 days from the date of application. Whereas in that 15 days case, that is you submitted the form but not completed other authentication within 15 days, the 30 days will count after 15 days. That is the time limit by which they need to grant you the registration certificate. Now, they have to upload the details of physical verification at least 5 working days prior to the 30 days. They have to give you registration within 30 days, which means prior to the 30 days, 5 working days prior to the 30 days, they need to do the physical verification and upload the verification report in the portal. That is this. What is the time limit for uploading the details? So where the physical verification is required before the grant of registration, at least 5 working days prior to the completion of time period, that is 30 days, they need to upload the details, that is premises photographs and where they have visited, all those things. Suppose if the physical verification is after granting registration, then in that case within a period of 15 working days from the date of such verification, they need to upload the details. So mostly for time limits, these provisions we need to know. Then Aadhaar authentication, mandatory at the time of registration or not mandatory? Not mandatory, it is optional. You can make application without Aadhaar authentication or with Aadhaar authentication. With Aadhaar authentication, after submission of part B of REG1, you will get a link, OTP verification needs to be done and registration certificate to be granted within 7 working days from the date of authentication, because date of authentication is the date of submission of application. If failed to authenticate via Aadhaar OTP within 15 days, then application is deemed to be submitted on expiry of 15 days without authentication. Whenever application is without authentication, so then physical verification will be done. So application without authentication or application with authentication but not completed within 15 working days, 15 days, or you completed but based on risk parameters, officer will conduct physical verification of place of business within 30 days of application. But now there is one amendment. Whenever you are making application without other authentication, you need to visit the nearest facilitation center where the photograph and verification of original copy of documents are to be completed. And one more amendment also, that we have biometric Aadhaar authentication across the country. Previously only for few states, now it is applicable across the country. Then for that reason they brought in now one more registration, fast track registration like that. 3 working days. That is not there for you. That will be there for future attempt. So I don't know why they put all those things. They are telling biometric Aadhaar authentication. You will not be able to go there and do. So for that reason, don't worry. We will bring in fast track. Okay. It is like, they have also become like CA faculties. This much information only. Regular batch, fast track batch, exam oriented batch. You understood or not? So what to do? Government is also like that. Then next, don't look at me please. So after physical verification of place of business, registration will be granted. Whether presence of the person, applicant is required at the time of physical verification? No. Presence of the person is not required. Previously that point was there, but now they have relaxed it. That person need not be present at the time of physical verification, means applicant need not be present. Any person who is authorized by the applicant can be there. Next, proper officer failed to issue notice within 30 days, deemed registration. So these are the points. If show cause notice received within specified period, then applicant need to file clarification. After filing clarification, officer should grant registration within 7 working days or else deemed registration. Other authentication, if opted, is mandatory, should be completed within 15 days. So whenever they completed the authentication or 15 days from the date of submission of part B, whichever is earlier will be deemed to be the date of submission of application. Physical verification shall be conducted within 30 days of submission of application. That is, after that 15 days, only the 30 days will be counted. And biometric Aadhaar authentication is now extended to all states and union territories for the purpose of completion of registration application. And applicability of Aadhaar authentication, this is important for theory again. To whom Aadhaar authentication is not applicable, like that they will ask a question. To whom it is not applicable? If you are not a citizen of India. And next, HUF, other than Karta. So if you are not a citizen of India, for individual, remember not a citizen of India. For HUF, remember other than Karta, all members other than Karta. For firm or LLP, other partners, only authorized or managing partner required to undergo, so other partners not required. Company or body corporate or other entity, other than authorized signatory, they are not required to undergo authentication. Government and its family members, that is central government, state government department, local authority, statutory body, PSU, not required. Others, UIN holder, also not required to undergo authentication. Whether TDS, TCS detector required to undergo other authentication? No, because this procedure is not applicable for them, not you. NOTU, you already there. NRTP also, this is not applicable. Other authentication not applicable. OIDR supplier or OMG supplier not applicable. TDS, TCS detector also, other authentication not applicable. Okay, so you write. So total 12 points. How many points you can remember and write? You write that many points. Other authentication not applicable. And you know what you need to do. So this whatever portion which I am going to tell, it is wrong only, but you do that. That is, you know 5A and 5B. So you don't know 5C, you write 6C. You understood? Okay. So you need to write for 100 marks. You need to write for 100 marks. You wrote question number 1, question number 2, question number 3, question number 4. But in question number 5, you don't know all the 3 parts. But in question number 6, you know 1 part. So here 2 parts, there 1 part. 100 marks you write. If they overlook, they will give marks. Okay. So why to lose that? You understood? Next. The above persons are not required to undergo other authentication even though they have already registered. But other than above, if they have already registered, they should undergo authentication. So authentication, even though not mandatory at the time when we make application for registration, but even at a later point of time, it is mandatory. So at the time of application only, it is optional. But the moment you went into without other authentication, get the registration, but at a later point of time, you need to complete the other authentication. And this deemed registration is also an important point for MCQ purpose. So they will give a question and they will ask, what is the date by which registration deemed to have been granted? They will give some few dates. From that few dates, if you add 30 days, you will get 4 options. Okay. So therefore, you cannot do option test also. Only when you know the provision, you will be able to do. So don't try option test to inky, pinky, ponky, odd one out, all these things and all. ICI, boss, ICI, got it? They will give, 4 Chinese people sitting in one bench and one photo they will give. You identify who is who, like that they will ask. Everyone will look like the same. So we don't know, got it? Like that only they will be giving options. You don't know. And you do one mistake, you end up with an answer, you will tell, Shabash, I got the answer. But that answer 99% will be wrong. You understood? So one mistake we will do, we will end up with the answer. That answer will be one of the option. Be careful. So first, Aadhaar authentication is opted. No. Aadhaar authentication not opted. 3 places physical verification. What are the 3 places physical verification? Aadhaar authentication not opted. Opted but not completed. Completed but they have taken up for physical verification based on risk parameter. In all these 3 cases, they need to do physical verification. What is the time limit? 30 days. Within 30 days, if they are not doing, deemed registration. Simple. So within 30 days from the application, within 30 days from expiry of 15 days, within 30 days from the application, if they are not doing physical verification, then it is deemed registration. The other 2 places, normal, you completed, they did not take physical verification. What is the time limit within which you need to get certificate of registration? Within 7 working days. Not received, then deemed registration. Suppose you got a notice, then you gave a reply. Within 7 working days from reply, you should have got registration. Otherwise, deemed registration. These are the 5 points in deemed registration. Time limit for making application for registration, section 24, CTP, NRTP, at least 5 days before commencement of business. For all others, it be 30 days from the date they are liable. So when are they liable? Section 24, starting business within 30 days. Registered under earlier law 1/7/2017 within 30 days. Transfer of business in case of amalgamation, etc. Date on which ROC gives certificate of incorporation, from there within 30 days. Other cases, date of transfer within 30 days. Any other person, any other cases, whenever aggregate turnover exceed threshold limit, from there within 30 days. Section 26, deemed registration. Please don't get confused between this deemed registration and this deemed registration. That deemed registration is registration deemed to have been happened. Means registration deemed to be granted. This is once you are registered under CGST Act, you are also registered under HGST Act and vice versa. We don't have multiple acts registration. But like that, telling only they are collecting fees and a lot of consultants. Okay. That's why audit and all they have cut now. Okay. Then, so CGST, one chartered accountant is collecting 15,000 for registration. Why? CGST 1 registration, SGST 1 registration, IGST 1 registration. Okay. If you do all those things and all, so sitting, one egoistic lady is sitting there. So what she will do, she will cut audit also for you. Now see, MSM is not required to undergo audit. Future they will tell, why practice? Happily study, go for job. Okay. CA practice is not required like that. Seriously, this is how the situation will happen. Clear and go for job. Any remote chance also, if you have in your mind that I want to do practice, so fold it and keep it somewhere. Okay. So only job, no practice. Future and all gone. For small entities, they will not be able to survive. It is not ease of doing business in India, ease of killing CAs. Okay. Then special provisions relating to CTP. Don't worry, job market is there. That is there. That is there. Job market is there. You don't have to worry. Okay. That is always there. That's always there. But only thing, practice is gone. And special provision relating to CTP, NRTP, section 27, the validity of registration. Usually CTP, NRTP should get registered, compulsory, and the type of registration given to them is what? Permanent or temporary registration, temporary registration. What is the period for which their registration will be? 90 days from the date of application, or the number of days that is selected, whichever is earlier. Suppose if they want only 30 days, don't write 90 days as the answer. So 30 days only. Suppose if they want 120 days, 90 days. After 90 days, can they make application for extension? Yes. So that will be extended for a further period of 90 days. But in no case the total period will go beyond 180 days. Then for the period for which they get the registration, as they don't have any physical place of business, they need to pay the advance tax. That advance tax should be based on their estimated gross liability or estimated net tax liability. Estimated net tax liability, that is after adjustment of ITC. And if they are going for any extension, for that extended period also they need to pay the advance tax, and whatever advance tax that is deposited by them will be into their electronic cash ledger, and that will be adjusted against their liability. If there is any excess amount in the cash ledger, they will get it as a refund. Is there any time limit to make application for refund? No, remember this. For cash ledger balance to withdraw, there is no time limit for refund application. Even beyond 2 years also you can make application for refund. And next, refund subject to unjust enrichment, like that one concept is there where you need to prove that you have not transferred the incidence to next person. That is not applicable in case of refund of excess balance from cash ledger. No time limit to claim such refund. Also in this case, the refund is not subject to unjust enrichment. Then these are the distinguishing points. Casual taxable person is a person who is coming from outside India to India, another state to this state, and is not having any fixed place of business in this state. NRTP will be from outside India to India and is not having any fixed place of business or residence in India. And CTP undertakes transaction in the course or furtherance of business. NRTP no such requirement. CTP has a permanent account number, but NRTP does not have a permanent account number. He can take registration with the passport and application REG1, but for NRTP this is not applicable, na? So separate registration is there, REG9, and CTP will file regular returns, GSTR 1 and 3B, but NRTP will file GSTR 5. Then section 28, amendment in registration. So whenever you have initially submitted the details and that details got changed at a later point of time, then you need to make an application for amendment in registration. So there are two types of fields where the changes could happen: core fields, non-core fields. If there is a change in name, change in address, change in top management like partner details, authorized signatory, etc., then that change is subject to approval by the officer. Whereas any other change like change in mobile number, email ID, or change in goods or services that you deal with, or change in bank account, etc., then directly when you make the amendment, the portal will take care of the change. That is this non-core fields: submission of application on the common portal deemed approval; core field, change in name, change in address, either principal or additional place of business; change in top management details like partners, karta, managing committee, board trustees, etc. Then approval of proper officer required. Usually the amendment will be prospective from the date of your application. Whenever you submitted the amendment application, from the date it will be prospective. However, if you want retrospective amendment in registration is possible only with the order of commissioner. And very important point, if there is any change in constitution that results in change in permanent account number, we cannot do amendment in registration. They need to get a new registration. If there is any change in constitution of business that requires change in permanent account number, amendment in registration is not applicable, and they need to obtain a fresh registration. First they need to get new registration, transfer the ITC, then cancel the old registration. Okay. Then procedure for amendment in registration, they need to make an application in form REG 14, and then within 15 days of the change. The time limit you remember, within 15 days of the change you need to submit the application. Once you submit the application within 15 days, they will take a action within 15 working days. For you all days are working days, for them only working days. Okay, for you 15 days, for them it is 15 working days. So they will give a notice within 15 working days of submission of this application. Then thereafter, within always notice within 7 days you need to give the 7 working days you need to give the reply. And after you give reply within 7 working days, within 7 working days either they will pass a order or reject the application. So what is the order for amendment? Suppose if they are not giving notice, within 15 working days from the date of application they will pass the amendment order. Suppose if they gave a notice, you gave a reply, within 7 working days from the date of reply they will pass the order for amendment. What if they are not doing within this time limit? Then it will be deemed to be amended. In case of amendment in non-core field, after submission of application, amendment shall take place in the portal subject to OTP verification. Then cancellation of registration. So there are few cases where your registration will be cancelled. So this can be asked as a theory question. What are the cases where registration of a person can be cancelled? So remember this: frantic violation of bailer. These are the list of cases. F for fraudulently you have obtained a registration. R for returns which is not filed for continuous 6 months or 2 quarters. A for annual return, under which scheme? Composition scheme, should be filed within June 30th. if you not filed within 3 months after June 30th, after due date, then N, you are no longer liable to be registered, means your aggregate turnover falls below threshold limit. T, transfer or discontinuance of business. I, invoice default, that is invoice without supply or supply without invoice. And C, change in constitution of business, like partnership to private limited company or individual to partnership, like that. In these cases, so they will be doing like you are eligible for, or your registration will be cancelled. And violation of what? Violation of bailer. B, for bank details to be furnished in time. You violated it, means you have not submitted the bank details within the time. Then anti-profiteering order you have violated, or ITC availment you have violated, means wrongfully you have availed the ITC, or your liability in one is greater than 3B, or your electronic cash ledger you did not pay 1%, 86B, and you have not filed a return within 30 days after revocation order. So first your registration got cancelled and you got the order of cancellation. Within a time limit 90 days plus 180 days, you need to make revocation application. Thereafter they pass a revocation order, and after revocation order, from the date of cancellation to revocation order, you need to file the pending returns. If those pending returns you did not file within 30 days after revocation order, again your registration will be cancelled. So return not filed within 30 days after revocation order. Apart from this, one more point is there, that is you have obtained the registration but not commenced business within 6 months. Voluntarily you have obtained registration but not commenced business within 6 months. These are the cases where registration will be cancelled. All those points I have given in the previous page. And what you need to remember is that first 3 cases, that is transfer or discontinuance of business, change in constitution of business, or taxable person no longer liable to be registered. Registered person can make application for cancellation, but in all other cases suo motu cancellation by the proper officer. And for making application for cancellation of registration, Aadhaar authentication is mandatory. And even TDS TCS deductor can make an application for cancellation of registration. This is the amendment point I was referring to. Registration of a person is cancelled. Such person made revocation application and proper officer passed revocation order, but returns during the period of cancellation to the revocation not filed within 30 days from the revocation order. Then look into this suspension of registration. Whenever the proper officer, you make application for cancellation or he initiates cancellation, he may suspend the registration. Suspension of registration is not mandatory, it is optional. May suspend the registration, and the suspension of registration can be without affording any opportunity of being heard. No notice and all for suspension. Directly they will do the suspension based on your application or based on they initiate cancellation. Next, procedure for cancellation of registration. You see, first you will make application for cancellation of registration. Within 30 days officer should take the action. Within 30 days either they should pass the order for cancellation or they should reject the application. Means for this period only they will do the suspension. Then next one, proper officer issues a notice. After the issue notice, the person should give a reply within 7 working days. Thereafter within 30 days, the officer will either drop the proceedings or will do the cancellation. And this 30 days is not given in the law. This is based on CBIC direction. Next, see this. What is the period for which your registration is suspended? When you make application for cancellation, the date you are selecting as cancellation or the date of application, whichever is later, till the conclusion of cancellation proceedings, your registration will be suspended. Or suppose if the officer initiates cancellation, whenever he gives notice, he will specify the date in the notice. From that date till the conclusion of cancellation proceedings, your registration will be suspended. During the period your registration is suspended, you cannot raise tax invoice to collect the GST, and you cannot avail the ITC, so you cannot file the returns. So you cannot issue tax invoice and you cannot file the returns. These are the 2 consequences. And the suspension of registration shall be deemed to be revoked upon completion of cancellation proceedings by the proper officer. So whenever officer initiates the cancellation, means officially, so far you were like an unregistered person but not officially unregistered person, but from that date it will be officially unregistered person. And here they have made one amendment for last attempt, that is, during the period of your suspension, if you file all the pending returns, so even then your registration is automatically got revoked. I mean suspension automatically got revoked and you can continue with the registration. So we cannot file the returns of the suspension period during the suspension period, but the returns of the earlier period can be filed during the suspension period. Say you did not file returns, because of it they initiated suspension of registration, and till the conclusion of that cancellation proceedings you can definitely file the returns of the past period, so that automatically there will be revocation of suspension. Then look into the next one, last section, section 30, revocation of cancellation of registration. First you need to make an application for revocation after cancellation order. What is the time limit? Within 90 days, and it can be extended for a further period of 180 days by either commissioner or additional commissioner, joint commissioner. But ensure that before making application for revocation, all the pending returns up to the date of cancellation, all the pending returns up to the date of cancellation you have filed. So then only they will accept your revocation application. And once they accept revocation application, within 30 days, either they need to pass the revocation order or they will give a notice. If they give notice, reply is always within 7 working days. Within 7 working days you need to give reply. Thereafter within 30 days, either they will pass the revocation order or they will reject the application. Now, once they pass the revocation order, what we should do? Within 30 days, we need to file the returns. From which period to which period? From the date up to the date of cancellation, already you filed the returns before making application. So from the date of cancellation till the date of revocation order, you need to file returns within 30 days. So all returns before the date of cancellation you filed before application, revocation application. All returns from the order of cancellation till the revocation application, whatever returns are there, those returns needs to be filed within 30 days from revocation order. Okay. So that is about this registration. We have seen all those points. Payment process we completed, and look into accounts and records and e-way bill, page number 166. As per section 35, what are the various accounts and records to be maintained by a registered person? So every registered person should maintain their accounts and records in the principal place of business pertaining to all place of business. In every additional place of business, they need to maintain the records pertaining to that additional place of business. If I am having business in Chennai, Madurai and Coimbatore, in Chennai is my principal place of business, I need to maintain accounts of all 3 places in Chennai, whereas in Coimbatore and Madurai I need to maintain the accounts and records related to Coimbatore and Madurai only. And what are those records? I formats. I for inward supplies, all records, but don't write like this, write it like point wise. All records pertaining to inward supply along with the supporting documents. And foreign trade, that is import and export. O for outward supplies. R for RCM purchases. M manufacture related records. A advances received, paid and adjusted. T for tax details, that is input tax and output tax. S for stock of goods. And if you are under composition scheme, this TS not required. Only I pharma. So this tax details and stock details is not required for a person opting for composition scheme. As per 35, the above records to be maintained by every registered person in principal place of business, and records pertaining to additional place of business in each additional place of business. What is the period for which these accounts and records should be maintained? Suppose if it is normal cases, 72 months from the due date of filing and return for the relevant financial year. 72 months means 6 years. 6 years. And suppose for a particular financial year you went for an appeal, then in that case the appeal outcome will happen 1 year from the outcome of the appeal, means appellate order plus 1 year, or 6 years from the due date of filing and return, whichever is later. So therefore 72 months, 6 years from the due date of filing and return, 1 year from the disposal of appeal proceedings, whichever is later. And every transporter or warehouse keeper, even though not registered, should obtain unique enrollment number and maintain necessary records. And what are the records to be maintained by each and every person? I just gave in this table. See that if you are a manufacturer, anyhow I formats is common, but apart from that some other records are there, and in this I formats also some records are not required, because nowadays they started asking the specific situation. Already they asked one question, what are the accounts and records to be maintained by an agent? Usually the theory question will be asked in 6, but nowadays what they gave is that in the regular question itself they have split 3 marks and 2 marks. In that 3 marks, 2 marks, in one question they are telling so and so person is a agent and he don't know what are the records to be maintained. You as his tax consultant tell what are the records, like that. Okay, they started asking like this. So what are the records to be maintained by a manufacturer? I formats plus other records. That other records is that process accounts and details of waste and byproducts. All process records also you need to maintain, like process costing plus what is the disposal of waste and byproducts, what is the money realized, that information also. Then being a trader, I formats but manufacturer related records not required. Being a service provider, I formats but manufacturer related records not required. What are the other records? Details of goods or services utilized in outward supply. How much of the inputs or input services used in the output service, so that utilization schedule also they need to maintain. Then composition scheme. Composition scheme I forma, this TS not required. Agent, all the records, along with that they get a authorization from each principal, that is contract with each principal. So details of authorization from each principal, and with each principal they will share the account statement of accounts with respect to each principal. Then works contractor, I formats, being a service provider, manufacturer related records not applicable, and they need to maintain all these records separately with respect to each works contract, and payment received also with respect to each works contract for recognizing the contract revenue, because there are different projects. Entire contract revenue cannot be recognized. Based on work completion they need to recognize. That's why payment received with respect to each contract. Then registered transporter, they are service provider, so I formats, and this manufacturer related records not required. Details of goods transported needs to be maintained. Unregistered transporter, so this I formats not applicable, because section 35 only registered person is required to maintain, but unregistered transporter should get a unique enrollment number and maintain necessary records. What are they? Description of the goods, consignor details, consignee details, vehicle details, then delivery address and storage address. So you just imagine that you are the officer, what are all details you expect from him, the details. Okay. Then registered warehouse keeper, again service provider, I formats except manufacturer related records. Unregistered warehouse keeper, I formats not required, but you need to know the description of the goods and this goods value and who deposited it, when they deposited, when it got removed, and what are the goods that got lost or destroyed. So those details should be maintained. Then next, e-way bill. E-way bill is a document to be generated by every person who causes the movement of goods. That is a mandatory document. Whenever there is a movement of goods, there should be e-way bill, and only in case of taxable goods only e-way bill will be applicable. It is to be generated before movement of goods. It is not applicable in case of exempted goods. Also, it is not applicable if the value of the consignment does not exceed 50,000. But while determining the value of the consignment, whether GST to be included, yes. So it is not applicable if the value of goods including GST, excluding exempted supplies, does not exceed 50,000. However, in case of job work and handicrafts, it is required, and it has two parts. So job work and handicrafts, don't check the limit. Always e-way bill is required in that case. Then, so it has two parts. Part A comprised of GST and details, and and other invoice details. Part B will contain the vehicle details. What is the validity of e-way bill? If it is over dimensional cargo or multi-mode transportation, where one leg of the journey is by vessel, waterways, then for every 20 kilometers or part thereof, the validity will be 1 day. 1 day for every 20 kilometers or part thereof. Whereas in other cases, it will be 1 day for every 200 kilometers or part thereof. And the validity will always be counted from midnight of the day in which it is generated to the midnight of the next day as 1 day. That's how it is counted, which means always the e-way bill will expire by midnight. So within 8 hours of its expiry, the e-way bill can be extended. Then what are the cases where e-way bill is not applicable? If it is non-motorized vehicle like horse cart, bullock cart, etc., or if the goods are transported between airport, port or land customs station and inland container depot and container freight station, all these are customs establishments. And even warehouse, when the movement of goods is under the control of customs, then e-way bill is not applicable. Then transit cargo transported to Nepal or Bhutan, then movement of goods for Ministry of Defence, e-way bill not applicable. Empty cargo containers, because it is no goods inside that. Consignor transporting goods to or from between a place of business and a weighbridge. When the goods are taken, when the lorry is taken to the weighbridge and the weighbridge is within 20 kilometers. Usually whenever the scrap, waste, etc. and all is loaded in the lorry, first the lorry will go to the weighbridge. They will take the weight of the lorry without goods. Again it will come back to the scrap yard, and they will load this scrap into the lorry. It will go to the weigh bridge. Now weight of the lorry with goods. So weight of lorry with goods minus weight of lorry without goods, that is the weight of the goods, and this particular weigh bridge should be within 20 kilometers. Then e-way bill not applicable. If it is beyond 20 kilometers, e-way bill is applicable. Goods being transported by rail where the consignor of the goods is the central government, state government or local authority. So government goods e-way bill not required, but if it is transported by rail, then goods specified as exempt from e-way bill in the respective state or union territory. Then some more specified goods are there, that is LPG for supply to household and domestic exempted category customers other than dealers of cylinders. But dealers of cylinders, all cylinders, let it be blue color cylinder or red color cylinder, e-way bill is applicable. But for others only, that red color cylinders, e-way bill not applicable. Kerosene oil sold under public distribution system, postal baggage, natural or cultured pearls, jewelry, goldsmith, silverwares other than imitation jewelry, and used personal and household effects. So these goods do not require e-way bill. Then whether e-way bill is required if the movement of goods is not for supply, yes. Whether it is under supply or without supply, e-way bill is required. And whether 50,000 limit is for taxable goods or exempted goods, taxable goods. If it has both, take out the exempted goods. And while computing invoice value, GST to be included. Who will generate e-way bill? The registered person causing movement of goods. If the supplier is registered, the supplier will generate e-way bill. If the supplier is unregistered, the recipient is registered, the recipient will generate e-way bill. If both are unregistered, the transporter can generate e-way bill, or alternatively, supplier and recipient can enroll as citizen of India. That is unique enrollment number they need to obtain, and they can generate the e-way bill. Whether transporter is required to generate e-way bill if the value of consignment does not exceed 50,000, yes. Supplier will not generate e-way bill because the value of consignment is less than 50,000. But like this, multiple consignments are transported in a single lorry and the total value of the consignments in the vehicle exceeds 50,000, then the transporter should generate the e-way bill for every consignment, and a consolidated e-way bill also should be generated. Transporter should generate the e-way bill as form EWB1 or EWB2. EWB1 is individual e-way bill for each consignment, whereas EWB2 is a consolidated e-way bill where all the consignments in the conveyance individually does not exceed 50, but in aggregate it exceeds 50,000. And blocking of e-way bill, if you are not filing returns GSTR1 or GSTR3B or CMP8 for consecutive 2 tax periods, your e-way bill will be blocked. Also in case of suspension of registration, our e-way bill will be blocked. And with respect to outward movement of goods only, e-way bill will be blocked, not for the inward movement. Outward movement, or for outward movement, either the supplier, if supplier has not filed returns for his outward supply, either supplier or recipient or some other person cannot generate e-way bill, but for inward supplies e-way bill can be generated. Then other points, in case of bill to ship to transaction, one e-way bill is sufficient and can be generated either by consignor or by the consignee. And next, multi-vehicle updation is possible in e-way bill, and part B of the e-way bill is there, that is to be updated within 15 days from updating part A, that is vehicle details should be updated within 15 days, means a vehicle should start moving the moment invoice is generated, that is the meaning 15 days. E-way bill should be accepted by the recipient within 72 hours from the generation or delivery of goods, whichever is earlier, otherwise deemed acceptance. Part B may be updated either by supplier, recipient or transporter. So these are the documents. Whenever there is movement of goods, if it is taxable goods, under supply, tax invoice plus e-way bill, without supply, then delivery challan plus e-way bill the moment it is taxable goods. Whereas if it is exempted goods, bill of supply or delivery challan alone is sufficient, and e-way bill can be cancelled within 24 hours of its generation if such conveyance is not verified by the proper officer. The moment it is verified, you cannot cancel that e-way bill. Mandatory generation of unique enrollment number. Unregistered person opting for generating e-way bill or unregistered interstate supplier of handicrafts, if they want to generate e-way bill, they can, they don't have to register, but obtain a unique enrollment number and they can generate the e-way bill. So that is about this, and we are left with 2 topics, 2 or 3, 2, refund, ethics and other provisions. Okay. So that refund, ethics and other provisions we will discuss tomorrow, and we will start with customs also. Okay. And see, my objective is to first complete this revision. Once this revision gets completed, then we can start working on the problems and solutions. Okay. So tomorrow and day after tomorrow, to the extent possible, I mean definitely it will be over, but Mighty 50 if I am not able to complete also, I'll discuss that with you on Sunday, okay. So by Saturday I wanted to complete customs. First that's it book revision I wanted to complete. So I just kept it like 6 days into 4 hours each. So 24 hours, and therefore this 24 hours is sufficient, and I planned it like this because evening anyhow you will be idle. This 4 hours it will not be that much effective for you, but if I take from 10 to 5 or 9 to 6, full day it is going, thereafter you are not going to read anything. That's why I just kept it in the evenings, so that in the mornings you can do some revision, you can prepare etc and all, and you can take a small nap also in the afternoon and you can come back fresh. That is the objective. That's why I kept it like this, so that 6 days, and thereafter so Mighty 50 questions definitely I will be taking, but only thing I may not be able to do it by Saturday, so I may be taking it on Sunday, okay. If possible I will do, but definitely not possible, I will take it on Sunday itself, okay. Don't worry about it. Thank you. And this 14 marks question also I have included in Mighty 50. I will explain how the 14 marks question needs to be presented, what are the integrities in that etc. So that we will see. So let's complete this portion first, okay. Thank you. And one more information, just sit 1 second. From December 5th onwards, there is a auditing free revision classes that is happening, face to face 500 rupees, and for online live, that is in our YouTube channel only it is being broadcasted, and it will be absolutely free. So if you have time, you attend face to face. If not, you attend online live also. I don't know what is your preparation schedule etc and all. So therefore that classes will be a concept discussion on standards on auditing. It's not on other things etc and all. Standards on auditing I am not taking. We have one audit faculty, no. So because nowadays any subject, if any faculty is speaking, so we doubt, because one faculty takes 4 or 5 subjects and all. I don't know, with one subject itself completely went off. If I take another subject, I don't know what will happen for me, and I am not taking. So another faculty by name Sudarshan, so he is taking, and so you attend his classes, definitely that time will not be wasted, okay, that I can guarantee. So it's up to you. December 5th to, I think 4 days, 5, 6, 7, 8, okay. Thank you.